Morning, everyone. Notice the time and place of these committee meetings was publicized by notifying the area news media, publicizing the same in the Omaha World Herald, OPPD Outlets newsletter, OPPD.com, and social media, by displaying such notice on the arcade level of Energy Plaza, and by emailing such notice to each of the district's directors on April 12th, 2024. A copy of the proposed agenda for the meeting has been maintained on a current basis and is readily available for public inspection in the office of the district's corporate secretary. In addition, a copy of the Open Meetings Act is available for inspection on OPPD.com and in this meeting room. Thank you all for joining us. As a reminder to those joining via WebEx, please mute your microphones and cell phones to reduce background noise. To members of the public, thank you for attending. You are in listen-only mode. If you have any technology questions, please use the chat feature in WebEx to communicate with the event host. Our agenda for today's meeting is as follows. We will conduct a closed session this morning to discuss two topics. First, Southwest Power Pool Generator Interconnection Agreement issues, and second, customer growth update. We'll conclude this morning's closed session no later than 9:50 a.m. in order to open the WebEx meeting to allow members of the public and OPPD staff to join. We will begin public session at approximately 10 o'clock a.m. and receive reports from each committee. Director Moody, do we have a motion to go into closed session?
We sure do. I move that the board goes into closed session at this time, 8:31 a.m. to discuss two topics: Southwest Power Pool Generator Interconnection Agreement issues and number two, customer growth update. With respect to the Southwest Power Pool Generator Interconnection Agreement issues, a closed session is necessary because the discussion will involve confidential matters covered by the attorney-client privilege and attorney work product doctrine. With respect to the customer growth update, a closed session is necessary because the discussion will involve competitively sensitive customer information. Do I have a second?
Second.
Director Bachman?
Yes.
Director Kavanaugh?
Yes.
Director Cord?
Yes.
Director Howard?
Yes.
Director Omaha?
Yes.
Director Moody?
Yes.
Director Spurgeon?
Yes.
Director Williams?
Yes. The motion to go into closed session has passed. This closed session will be limited to discussion regarding two topics: the Southwest Power Pool Generator Interconnection Agreement issues and customer growth update. No votes or other board action will be taken. A motion and a second is required to come out of closed session.
So moved.
Director Bachman?
Yes.
Director Kavanaugh?
Yes.
Director Cord?
Yes.
Director Howard?
Yes.
Director Omaha? Director Moody?
Yes.
Director Spurgeon?
Yes.
Director Williams?
Yes. The motion to come out of closed session at 10:10 a.m. is carried. This closed session was limited to the discussion regarding two topics: Southwest Power Pool Generator Interconnection Agreement issues and customer growth update. No votes or other board action were taken. Notice of the time and place of these committee meetings was publicized by notifying the area news media, by publicizing same in the Omaha World Herald, OPPD Outlets newsletter, OPPD.com, and social media, by displaying such notice on the arcade level of Energy Plaza, and by emailing such notice to each of the district's directors on April 12th, 2024. Thank you all for joining us. As a reminder to those joining via WebEx, please mute your microphones and cell phones to reduce background noise. To members of the public, thank you for attending. You are in listen-only mode. If you have any technology questions, please use the chat feature in WebEx to communicate with the event host. We'll take public comments at the end of today's meeting. That's new, so again, public comments at the end of the meeting today, as well as at the board meeting on Thursday, April 18th, which will be conducted in person at the Omaha Douglas Civic Center and will begin at 5 o'clock p.m. The public may attend in person or remotely via WebEx by going to OPPD.com. Joining me today in person are my fellow board members, Amanda Bogner, Mike Kavanaugh, Matt Core, Sarah Howard, Jenny Smolhoff, Craig Moody, and Mary Spurgeon. We also have members of our executive leadership team, Steve Bruckner, our general counsel with the Fraser Stryker Law Firm, and OPPD staff. Additionally, we currently have 18 attendees in the virtual meeting this morning, consisting of OPPD employees and members of the public. Today, we will hear the following committee reports: the Governance Committee report from Director Bogner, the Finance Committee report from Director Spurgeon, the Customer and Public Engagement report from Director Howard, the Systems Management and Nuclear Oversight Committee report from Director Moody. Javier Fernandez will now give the safety briefing.
Thank you, Chair Williams. I'm going to ask Ms. Amber Burke to give us a safety briefing here, physical safety briefing for those here in the room.
Good morning. I'm Amber Work. I'm one of the shift advisors here.
So in the event of severe weather, we would move to stairwells where we could either take shelter. If needed, we can evacuate the building. Please use the nearest exit and then gather across the street in the hotel lobby where we can account for everyone. Fire suppression and first aid equipment is located outside the main entrance to the conference room near the bathroom. It is also located at the security desk where AEDs and first aid kits are available. Be aware of any environmental hazards that could cause trips or falls. If anyone needs assistance during this meeting, please let members of OPPD know or staff here at BCBS building. Thank you.
Thank you, Ms. Warwick. Just quickly on the psychological safety part of things, it's just as important as having physical safety, having an environment where we all feel safe, expressing opinions, having healthy debate and dialogue. The topics that we often discuss are complex and we require multiple perspectives, and that's the area that I'm going to focus on today is multiple perspectives. So just by looking at the strategic directive framework we have within OPPD, we have 15 different perspectives that we have to take into account as we govern, as the board governs, and we execute that strategic directive framework for our customer owners. So it's just a good reminder that there's always more than one perspective on all of the items that we discuss. So I will ask everyone to consider that. On the cybersecurity front, we continue to be active, training, aware. Bad actors are getting better every day, and I continue to receive, and I'm guessing you all have experienced phishing emails. Some of them are fake phishing emails, some of them are real ones. I really don't want to find out when I click on a real one, but we are all, just a reminder that we are all one click away from allowing bad actors into our system. So it's a good reminder that we have to, all of our employees on a quarterly basis, having training and awareness and coaching so that we don't repeat these whenever we click on a malicious link. Then the next slide, please. Safety focus for April. Just speaking of our safety, a cornerstone of a safe workplace culture is the ability to speak up. We were just talking about psychological safety, and it's important for us to be able to speak up when you don't feel comfortable with the work that you're about to perform, when you don't see all the safety measures being observed. Stop the work. And we have a culture where I have specifically told employees it doesn't really matter what your title is, where you're in the company. It doesn't matter whether you're a full-time employee of OPPD or a contractor. We are all looking out for each other. So the ability to speak up on behalf of safety, it's really, really important. Working from heights, as spring rolls in, we're starting to see a lot more work performed up in heights. Life-saving rule number one is to utilize proper fall protection or restraint while working from heights. A good lesson I got at the beginning of my career in the utility sector was you can always prevent or work to prevent a fall. Once you start falling, all odds are off. You lose control. Sounds obvious, but I've had to remind myself that at home when you're putting up the Christmas tree or you're working on the gutters, it doesn't really matter how high you are. Once you're falling, you lose control. You can break your neck, you can have a fatal consequence. You're better off preventing that fall than trying to cushion the fall when you're coming down. And also, April is Distracted Driving Awareness Month. Thousands of people are killed and hundreds of thousands more are seriously injured in distracted driving crashes each year. It is very concerning. I still see on the freeway many people, especially those who are speeding and cell phone distracted driving is never a good combination, and it is concerning. So it's something that we continue to remind our employees and people who are watching today. Everything can wait. That phone call can wait. That text, that email can wait. It's not worth putting your life or other people's lives at risk. That concludes my safety briefing.
Thanks very much. The first committee today is the Governance Committee. Director Wagner.
All right, thank you. The Governance Committee met on April 9th and all of our committee members were present. We started the meeting with the Southwest Power Pool Open Access Transmission Tariff update. We reviewed provisions of that tariff for board awareness and understanding. We also then moved on to LB 43. We have some new procedures to allow public comment during all committee meetings, which will begin today. And so for the public, that'll look and feel very similar to how you are allowed to make public comment during board meetings. And so we, Chair Williams will tee you up for that later today. Item 5, the policy revisions to BL1, 7, and GP3 are on our docket today, so we'll skip over that. We did review SD1 Strategic Foundation Monitoring Report. There were a couple corrections that needed to be made to that from last month's review, very minor corrections, and those are part of our official public record, and we'll be approving that on Thursday when we approve the March minutes. Then we discussed the 2024 board workshop that's coming up in August. Is now a good time to talk about dates?
Yeah. We're looking at the possibility of August 29th, Thursday. So we'll be reaching out and hopefully August 29th would be an ideal date. I think.
It's a Thursday.
It's Thursday.
So, all right, so we'll look for some follow-up there, board members, so, and mark your calendars. And then we also reviewed the planning calendar, and, you know, just looked ahead for the next couple months. And we have a full slate of agenda items coming up at us. And then our final topic was to review our work plan, and we got to strike 3 things off the work plan this month, which felt really great. So with that, are there any questions, any committee members that would like to add to the conversation here? Any questions from my other board members? Very good. We will now move on to our next agenda item, which is the board policy revisions to BL1, 7, and GP3. Scott, will you walk us through that?
Absolutely, Director Wagner. Thank you. If you all recall back, we just talked about the board workshop coming up. It's hard to believe that August 30th of 2023 was when the board had its last workshop. During that workshop, these 3 policies were discussed really in response to a broader question. If we go to the next slide, please. How can the board effectively delegate without relinquishing oversight? The notion was there's an opportunity to delegate, but let's make sure that the right conversations are happening and that those conversations that both the board and the president and CEO want to happen are kind of officially documented within policy. So there was quite a bit of conversation, if you recall, both in small group and in large group. But basically the actions that came out were highlighted here at the bottom. And that was basically on BL1. There was a sentence, attend meetings with the board and report on the general affairs of OPPD, ensuring sufficient information is provided. And the board made the determination that it felt that those 2 should be 2 separate bullets. The second one was to clarify the consultative role of the board, asking that BL7's 5th bullet be edited to read, the CEO shall inform and consult with the board. It was an informed statement before. And then GP3 be edited to actually acknowledge that the board itself has a responsibility to consult with the president and CEO. Overall, if we go to the next slide, the thought is that these changes really are more housekeeping in nature to really reflect the type of discussion that the board intends to have, but still all board refinements go through this process. And ultimately, the governance committee, after discussion in March, landed on this thought today to bring this forward to the board through all committees meeting for approval on the 18th. If we go to the next slide, you see BL1, the change highlighted here as I highlighted earlier. Next slide, BL7. Really the red line is the part that's changed. The CEO shall inform and consult with the board in a timely manner. And then the next slide, the red line here is talking about the board's intention to consult with the CEO on those activities that the CEO reasonably determines presents regardless of the size of the financial commitment aspect, unique, well, you can read all of it. I can't right now, my glasses aren't working as well for me, so I'll let you go ahead and do that. But basically making sure the right conversations are happening around risk. I will acknowledge there is one open board action item that refers to the types of conversations that are intended to be had between the CEO and the board and having these intentional quarterly meetings and doing this type of thing. I would also say that that is an action in service to the initial intent. These policy changes are additional actions. Any questions around the proposed changes?
Thank you for all your help in shepherding us through this process. Scott, I think that, the primary point of these revisions were we are operating this way. And so we wanted to document it for future boards to understand how good governance should occur.
Thank you.
Thank you. All right, so the decision in front of us is, are we ready to take this to a board vote on Thursday? Or do we need to send it back to committee for additional deliberation?
I don't think it needs to go back to committee. I guess I'm wondering about 30-day. We put it out for public comment and then vote on it in a month.
So we had talked that since this is generally how the board is operating,
Yeah.
that we felt comfortable not extending a 30-day comment period. Whereas if we were making a revision to a strategic directive, that very clearly should go to public comment.
If I may offer to, I mean, we've done like housekeeping of changes with regards to the overall policy manual and that type of thing. And I think the conversation at committee was just fell into that category.
Okay.
And that did not go up for the 30 days. What's gone out traditionally has been the SDs. I mean, I think every SD, I can't say for certain, but I think nearly every SD has gone out.
Sure. Okay. That works.
So we'll vote on this on Thursday. Good, thank you very much. And with that, the governance committee rests.
Perfect. Thanks very much. Next committee on the agenda is the Finance Committee. Director Spurgeon.
Thank you. Well, we met on April 5th, Friday morning, and following the safety briefing, we had an informational report from Mr. Vai regarding some things going on at the North Omaha station. Should for people who are listening, members of the public, and employees who aren't aware, half of the board sits on the Finance Committee, and the other half sits on the Public Engagement Committee. So if there are reporting items, they'll come to us, even though they seem to be outside of our level of place of responsibility for the committee itself. And that was one of those. So we're going to hear more about that particular item today. The next item was a rate design project, which is squarely under the Finance Committee's purview. And this is just again a reporting item for us, how things have been going. They're keeping up. They're on their timetable, and we'll hear more about this, I believe, at the June all committees meeting. Then followed the retirement plan annual report, which we'll hear more from today and more about today. The 401k and 457 retirement plan savings plan annual report, which was discussed actually under governance, the last all committees meeting, but it was just repeated here because it's a big financial piece for the district and for our employees certainly. And then the other post-employment benefits or OPEB trusts reports were received. We discussed the SD14 retirement plan funding monitoring report, which we are going to hear about today. And I'll took a look at our next work for the next months and had a summary meeting, and that was our Finance Committee meeting. So I will turn this over to CFO Bishop for the next items.
Thank you, Director Spurgeon. We're going to go over some of the key benefits that we provide to our employees, specifically on retirement benefits. We've closed the books for 2023, so we're going to report on how the plans performed. Again, we just highlight the importance of this as it relates to our employees as we think about talent attraction, retention, and making sure that we've got a very competitive series of benefits for our employees. These really highlight that. Out of the gate, we're going to talk first about the retirement pension plan. We've got Siegel Marco online. Jeff Busick, as well as Keith Reynolds are both on. Jeff was going to be here in person, but unfortunately was under the weather. Jeff, we hope you get feeling better, and we do appreciate you staying home. But with that, we'll pass it over to you, Jeff, to walk us through the results of the pension plan for 2023. Jeff, if you're there, maybe you might be on mute.
You hear me now?
There we go.
Okay.
Thank you.
Well, again, I'm sorry I can't be there. Whatever I have gotten is reminds me of when I had COVID, so it's pretty ugly, and I'm headed to the doctor when this meeting's over. So I appreciate you accommodating me virtually, and with me is Keith. I'm going to pretty much lead the way through this today, and Keith will provide any color commentary that might be needed in case I sort of fade out towards the end here. So if you could just turn to, I guess it would be page 4. Yeah, right there. So 2023, when I was out to see you folks last year, we were talking about 2022, and I kind of said, the crystal ball for 2023 at the time was, forecasted rate hikes. So that would not bode real well for the bond market. And looked like we were going to enter a recession at some point. At least a lot of the pundits thought we were going to do that. That probably wouldn't look real good for the stock market either. So my comments were we'd probably see negative results for bonds and maybe high single-digit returns from the equity markets, as we get through the end of the year. Along the way, we had a lot of fits and starts. We started to hear the words higher for longer, meaning that interest rates would stay higher for longer. That didn't help the markets at all. That, really kind of put them in a tailspin again. But when you look at this chart, you see where things ended up at the end of the year with U.S. equities up roughly 26%, U.S. fixed income up 5.5%. The logical question is what the heck happened between the middle of the year and the end of the year? And really what happened was towards we get to the end of the year, we got into the fourth quarter, and the Fed chairman started to indicate more than likely we're going to see rates come down in 2024. So the stock market rallied, the bond market rallied. In fact, the bond market rally in November and December was the largest 2-month rally since the early 1980s for bonds. So there was a lot of euphoria coming into the end of the year, and that's really what propelled the market up. When you peel back the onion and look at things a little closer, especially in the equity market, what you find that there were 7 stocks, largely technology oriented. They called them I think it was the Magnificent Seven. There were a lot of acronyms being thrown around about them, but those of you old enough to remember, the Nifty 50, the connotation is that a small number of stocks really drove the market towards the end of the year, and that's really what happened there. But again, a 26% return is pretty healthy for any year. In fact, it's healthy for 2 or 3 years tied together. So we'll take it. And then just to update a little bit here in 2024, the first quarter started out, with me saying kind of the same thing. The Fed's thinking that rates are going to come down, but I didn't really see that on the horizon. So I still kind of thought maybe we'll see some modest positive results out of the bonds if rates do in fact come down. And we'll probably see, high single-digit results for stocks. So as we got through the end of the first quarter, the bond market was really trading off because it did look like higher for longer might be the way we're going to be. Fed Chairman Powell has suggested 3 potential rate cuts this year. He's kind of backing off a little bit on that. Some of the Fed governors are actually saying, the risk of cutting rates too soon would be higher and more detrimental to the economy than kind of hanging on to this higher rate environment for maybe too long. And I would tend to agree with that. They don't want to do that too soon. So now all of a sudden the world's kind of thinking, well, maybe it is, higher for longer. But what we're starting to see, and we did see it last year too, every data point that comes out about the economy, about the consumer, about GDP, about inflation, tends to move this market up or down, and it's very quickly to react on more on an emotional side than sometimes on a logical side. So I think we're going to see volatility again this year, just like we did last year. We got geopolitical risk out there, some of which we had last year, some of which is new this year. And the big thing that would drive the market up and down all together is the election that we have, the presidential election. That always causes volatility. So the markets like clarity. Anybody looks in a crystal ball right now can't see anything. It's just a murky mess. So the volatility is here to stay. And I think right now I'd kind of go back to what I said a year ago: high single-digit returns for equities and potentially negative results, or at least modestly negative for bonds by the end of the year. But we'll see. Again, I don't have a crystal ball with any clarity either. I'm just sort of giving some thoughts as to what I see out there right now. So that's where things were last year. Let's take a look at last year, beginning on the next page, with the pension fund. So you can see we began with just over $1 billion, and by the end of the year, we had an appreciation of 126 million. So we ended with 1.2 billion at year end. So nice absolute growth for the portfolio year over year. Page 6 just shows us our one of two financial objectives that we had. The next page, I'm sorry. So the first objective is to exceed inflation, net of investment management fees, and you can see here when you excuse me, I'm sorry, when you see here the first year here, 1 year number, I'm sorry, 11.6 versus 11.6. This isn't the inflation. The inflation's coming. I'm sorry. This is just to outperform the benchmark. So you can see by 10 basis points this year, we outperformed. So pretty much in line. Last year was 10 basis points under. We had a tough year 2 years ago that impacted some of those 3 and 5 year numbers. But again, a very, very choppy market in 2023. So the fact that we held in there as well as we did, we see a lot of clients' portfolios that didn't hold in because of the volatility swings and the narrowness, particularly in the equity markets. We saw a lot of portfolios in total underperform. So I'd say from a relative basis, good relative results here relative to the benchmark, given last year's climate, and then also from an absolute sense, a nice return of 11.6, well above the actuarial assumed rate of return here. So I'm sorry, the next page, 7, is the page on inflation, and here our second objective is to earn 4% above inflation rate. And you can see left to right, we had a very long time where we did do that. When we got into 08 and 09, things took a nosedive when the markets, when we hit that financial crisis timeline, and then we came back up and kind of were in line or modestly below, and then again moving towards the end here, we started to move up. But then when we got to the inflation environment of 9%, obviously that didn't bode well for the markets at all, and so we've dropped back down. Long term, I still think this is a doable objective for the plan. But again, even when you see these big spikes like we just saw in the last couple of years, you're going to see these periods. Even when we try to smooth them with rolling numbers, you're going to see these numbers drop down like this. So we'll turn to the next page now and start to dig into some of the details within the portfolio. So here we see our domestic equity in total, in individual line items here. So the State Street Index Fund, in line with its benchmark, tracking very closely. Wellington, which is one of the managers currently on watch, you can see they struggled again. We're watching them very closely, and again, the committee has put them on watch, and they were aware of that. So we're going to see how things play out over the next quarter or two and make a decision one way or another about them. Frontier, one of the newer managers in the portfolio that we've added, small cap growth, exceptionally strong year, up over 23%, well ahead of its benchmark. And then LSV had another very good year, on top of a couple behind there, up 19% versus roughly 14.5 for its benchmark. So again, a good relative result for LSV. The next page shows our international equity managers. And again, we have a new member in the lineup here, MFS. You can see outperformed its benchmark up over 19%, the benchmark being roughly 18%. Invesco outperformed their benchmarks, so good results from them. Allspring is a manager not currently on watch, but one that we are kind of keeping an eye on right now, and they did struggle in 2023, and they've actually had a tough couple of years in a row. So one of the reasons we've got an eye on them coming into 2024. Global Alpha, one of the newer managers, again struggled a little bit here, obviously in 2023, and you can see the results a little over 7% versus a benchmark there of 13. But again, no concerns on our part of something wrong with their investment process. The domestic fixed income managers are on the next page. And, again, I said bonds were an interesting place to be, a lot of volatility, which you don't usually see in bonds. But all things considered, not too bad of a year for us. The two State Street funds up at the top and at the bottom, the broad bond market index, right in line with the aggregate, and then the tips down below, right in line with that benchmark as well. The active managers there, Reams, JP Morgan, outperformed their benchmarks. The same, they do a diversified core strategy for us. And then Neuberger and Berman is the high yield bond manager. They you may remember, were on watch last year. The decision was made to move on from them during the year. This will be the last time you'll see them in a report. They did manage money through the end of the year. You can see they modestly lagged their benchmark for the year, but they are being replaced by Mackay Shields, really kind of as we speak right now. The emerging market debt, the last of our fixed income market managers on the last page, Stone Harbor. Stone Harbor is another manager that's on watch, and they are a very volatile manager. This is a volatile asset class, and their tracking error, in other words, how close do they follow the benchmark over time? And they do have a fairly high tracking error, so it's not uncommon for when they're out of favor to be out of favor in a big way and in favor in a big way as well. But you can see here up almost 15%. Strong absolute result, and really outperforming their benchmark, which was up 10.5%. The private real estate, you'll remember, is a new asset class. It seems like it was only yesterday we put it in there, but it's really been, as you can see here, over 5 years that we've had it in there. Real estate was a tough area last year. Probably still will be a little bit this year, but I think we're very close to the bottom. The types of products that we have here, obviously we're not immune to negative results in 2024 or 2023, I'm sorry. But you can see they held up better than their benchmark. So the Harrison Street property fund, which you'll remember is, student housing and nursing homes, storage, sort of not quite the core strategies, but it was down 4% versus over 12.5 down for the index. And the PRISA fund down a little over 10% versus the same index, which again was down more than 12.5%. So not immune to losses, but held up better than a lot of other real estate products during 2023. And then the last two pages, I don't think we've shown these to you in the past. I think we didn't have enough time, or enough time, meaning time invested with them, to bring these out last year. But we added some private debt to the portfolio, which has been very additive in results. So we took this money away from our global fixed income allocation and redeployed it in private debt. We went through an education session with the committee, talked about why we thought this would be a more attractive area for the pension fund longer term, and did a search and ended up with two managers in the portfolio. Right here you see the Neuberger and Berman portfolio. We committed $80 million to this fund. And as you go down there in the lower left-hand corner, you can see the inception IRR, the internal rate of return, a very, very strong 15.4%. So strong outperformance relative to the the Berkeley or the aggregate U.S. bond market, and as well as the global bond market where this money came from. TVPI, total value paid in capital, that's a statistic that basically says for every $100 that you've given them, they've given you $120 back. So again, this has been very additive in the portfolio and something that we're very happy to have there now, and we think it's positioned well for the future. The next page is the other part of this. We took a $20 million commitment for a total of 100 in this asset class and gave this to Corbin Capital. And you can see there, again, looking down in that lower left-hand corner, very strong IRR there, 12.5%, TVPI 1.1. So for every $100, they give you 110 back. These are still early in their life cycle, so we have yet to see these play out entirely, but we think they're going to be very additive to the portfolio long term. And the committee, I think, is to be applauded and give themselves a pat on the back for moving into something new and really uncharted for you all, but again, something we thought was prudent and could provide some good diversification benefits to the plan.
Hey, Jeff, quick question. Just to clarify on both the private debt fund and the credit management fund, you have inception dates and then inception IRR. That's on an annualized basis, right?
That's correct.
Thank you.
So the last page just summarizes everything we kind of went through for you. You can see for the year up 11.6 net of fees, assets up 138 million, year-end market value 1.2 billion. We outperformed by 10 basis points net of fees in 2023. The newer managers have added to the results here. And the total fund, I think, continues to perform well over a longer term. We've had some hiccups in the middle here, but again, we have active risk in the portfolio, and active risk means both good numbers and bad. You can have active risk being positive and active risk being negative. And we've gone through a period of the negative. We've cleaned some managers out, and I think we're positioned well. So I'm happy to answer any questions anybody might have.
Hey, Jeff, I have one. If we could go back to the domestic equity page, and specifically Wellington. I guess I don't understand why we're still being patient there. Particularly the last 5 years has dragged their numbers down, obviously for 15 years out probably. But how much longer are we going to wait? It seems like that's well past the time to pull the plug.
Yeah, the process for putting managers on watch with OPPD is one where when we get to the point where they've sort of missed the mark on a 3 and 5 year point in time, missed the mark meaning they've underperformed their benchmark, underperformed their peer group, that's when we notify them that they're on watch. And that I think we're just coming up on that 1 year period. Joan Thurber, or Joan Petrola, she might remember the date when they went on watch, but we're just getting close to that 12-month period. When you look at these numbers, and these are point in time numbers, they've been materially impacted by the last 24 months, 18 months. So again, they look bad here at this point in time, but if you go back 2 or 3 years ago, the numbers weren't that bad. They actually were more reflective of outperformance than underperformance. But then they hit this timeline here where things aren't looking well. So my thought is without remembering for sure when they went on watch, if we don't see any improvement, coming out of the first quarter here, we'll probably take steps to replace them.
Jeff, you've got that right. We're coming up on the 1 year anniversary, so we will be performing that review. And just to give some confidence to the board, we have a very mechanical control process around specifically if funds aren't performing when they go on watch. We spend a lot of time walking through and having detailed conversations about their performance. And again, we'll be coming up on the 1-year review period for Wellington, so more to come here shortly.
I think it's worth just emphasizing the point that Director Kavanaugh was making, which I really appreciate the question here. And just for the public and for our employees to understand, when you see a fund on the 5-year underperforming, it doesn't mean that it's been 5 years underperforming in a row.
I understand the impact of the most recent year, but
Right.
it almost seemed like it's been more than that, I guess, to have that big of an impact. I mean, 100%, we're in the bottom 1% over the last 3 years. It would seem to me that, I don't know, that 1 year had that big of an impact to drop down to the very bottom.
It's probably been about an 18 month down, underperformance period for them. A manager that at one point in time looked kind of like this would have been Stone Harbor. I mentioned before they don't track real closely. So there was a point in time where you look at a number, series of numbers. Right now is a point in time where them looking back, and they had a pretty bleak outlook as well. But again, that's kind of in keeping with them. Wellington, this is not quite what we would expect from them. So that's why, as Jeff mentioned, there's a process here that once they underperform a benchmark or their peer group for a 3 and a 5 year period, like right now, like let's just say this is the first time we saw them, hey, their 3-year number, their 5-year number, yeah, they got to go on watch. But that could have really been a result of what just happened in the last 15 months that put them there. And I think that's the point, that it didn't happen overnight, and it didn't happen over a 5-year period. It's just at this point in time when we're looking at them, this is where they are, and we're very close to the end of the evaluation. In fact, I can't remember if they were in last meeting or the meeting before, but we let them know the concerns that we had. The committee was had quite a lot of questions about things. So we're if things don't improve, then we're gonna be back to you telling you we replace them with somebody else. That's a great question.
Any other additional thoughts on Wellington or the process?
Thanks, Jeff. Yeah, just to add what Jeff commented about, really, this has been a 3-year kind of slow transaction, but it's really impacted their long-term numbers. If you had looked at December 31st, 2020, Wellington was one of our best managers for a long period of time. And so it's really been impacted by the last 3 years. And so that's why when we saw the impact and performance here recently in 2023, it really skewed the longer term numbers, and we put them on watch. Actually, the watch period is over with in September for Wellington. Stone Harbor, another manager we have to watch, it's over with here in March. It actually ended here. We're going to talk about them in a couple of months. So it is important. Obviously, it's very poor. If you do go back though to like the inception number, since we hired Wellington, they've actually been above the benchmark since inception. You don't see that because we've held them for a very long period of time, but it is something that we look very seriously at. Thank you.
I understand, but and we go further than 15 years out.
We do.
That's ancient history.
It is, but we look at it over the entire period, and if they've returned above the benchmark for the entire, let's say, 20-year period, then we don't feel as warranted of making an immediate change.
Okay.
Thank you, Director Kavanaugh.
Thanks, Les. Thank you. Thanks, Jeff.
And the watch list language is in the investment policy statement just for that reason, to make sure, you can take comfort in knowing that action's being taken, that we're just not ignoring performance or organizational changes that might occur, that there is a red flag and we're acknowledging it.
Thanks.
Any other questions for us?
See none here?
Well, again, I apologize for not being in person. I always enjoy seeing you all in person. So we'll put this down for next year for sure. And hopefully I won't come down with whatever it is I've got, and I will be there in person. But thank you again for accommodating me and Keith today. And should you have any other questions after you have a chance to think about things, feel free to give them to John Thurber and his team, and they can get them over to us, and we'd be happy to report back.
Thank you, Jeff. We wish you a prompt recovery.
Yes.
Thank you.
All right, next we've got the 401k 4057 retirement savings plans results for 2023. We've got Tim Vasquez up here, supervisor in our financial operations organization. Great plan here. We've got 98% of our employees participating. So a key retirement benefit for our employees. He's going to walk us through the performance of the offerings that we have in the plan.
Sure. This is just annual report out. We'll just talk briefly on the next slide. We are up to $619 million in the combination of both plans. We have a 401 and a 457 plan. A great benefit for the employees. We offer a match. We just comment briefly on the amount that OPPD has contributed and the amount that the employees have contributed this year. One of our better years. On the next page, you see our returns for the plan, similar to what we saw in the retirement plan. Very good returns this year. I think I counted over half the funds are in double digits. That's not a very common year, but a very appreciated year. We commented in the committee. We do have a retirement advisor or a plan advisor that participants can call, and it helps them manage some of these ups and downs of the market. And the participants are very engaged. Not only do we have a 98% participation rate, which is huge, they also are engaged regularly and annually with their advisor, which is great. Great benefit. It gives me a chance to thank everyone for providing this kind of a benefit to the employees.
Tim, in your experience, if I may, with the advisors, what's the average participation rate that you see on a company of this size?
At the last government function that I went to, it was like 25% was their number. They kept looking at me going, how do you have 98%? And it's a great, one of those pats on your back. You offer a match, that's a good help, but you also have to get them engaged in the plan, have something that they can actually call, access, and talk to. There's no substitute for one-on-one financial advice, and that's what we offer to the participants at no cost to them.
What's the match? Remind me.
4,000 annually.
The percent.
Could be a percentage, yeah, but it's up to $4,000, and most people hit that number.
Okay.
Dollar for dollar on the first 150, and then 6% on 50%, I believe the pay. I could get you the exact.
Curious. Yeah.
Most people hit the 4,000.
Thank you, Tim. Any more questions for Tim? All right, we've got a great segue. I think everyone knows Jim Anderson. I think he's highlighted, flexed his payroll muscles there in terms of how our paychecks get processed. Jim, can you walk us through the OPEB trust report?
Good morning. The OPEB trust are kind of two trusts developed for the same purpose, funding medical and life insurance benefits for retirees. They're split based on the level of benefits received by date of hire. There's a trust for those hired pre-2008, and there's a trust for those hired post-2007. Both trusts performed very well in 2023. The pre-2008 trust has a balance of $184 million, and it had a return of 11.6% for the year. The 2007 trust is $9.4 million, and it had a return of 10.3%. The target returns for those two trusts, the pre-2008 is 7%, and the post-2007 is 5.25%. On the next slide, you'll see kind of how those investments are broken out and return results for those various funds. Take any questions?
Not a question. Thank you so much. Just a reminder, this is a benefit that employees, retirees, once you leave service, you continue to experience that benefit from a medical insurance perspective. That I think it's important to remind ourselves of that, because retirees not only get their pension check, but there's a lot of value in the benefit that this OPEB fund is delivering via a lowered, subsidized medical premium that retirees get. That's what this fund is.
Yeah, that's more kind of the pre-2008. The second one is more of a flexible medical providing fund.
I just want to say that these positive results don't happen by accident, and I appreciate this positive report and that you know, your team is really working hard to bring the best value to our retirees that they can. So thank you.
I'm very fortunate to work with, quality investment management, Jeff and John Thurber as well. So I'm along for the ride.
And thank you for all your years of service. Appreciate it.
Other questions? Great. Thanks, Jim. All right, we'll jump into the SD14 retirement plan monitoring report. What are we doing here? We're trying to ensure that we're achieving our retirement plan funding levels. We do this to ensure that we can, one, pay our retirees in the future, and also make sure that we've got a healthy financial plan. As we specifically look at that, there's other pieces that come into play as well. We have a very specific reviews that come in from the rating agencies. There's a lot of other entities that are external to us that want to make sure that we're have a very healthy pension plan. So specifically relative to that, we've got the three criteria. We're going to walk through each of those separately. I do want to lay out some fundamentals or the mechanics of how the plan works. So we just got done talking about earnings, right? So that's one of the three elements. When we think about the other elements, we've also got contributions and withdrawals, and those are things we haven't covered. Just from a mechanics perspective, contributions plus your earnings need to equal your disbursements in the long run. And with that, we'll highlight also that your contributions come from both us as the employer and then also from our employees. Withdrawals come from our retirees. So I want to lay out just the basic mechanics of how the plan works. I'd also highlight as it relates to any of those variables going up or down, we talk a lot about earnings volatility. We'll talk more about how we plan for that from a long-term perspective. But if any of those variables goes up or down, we've got to have a corresponding adjustment with the other variables. So a decrease in earnings would result in a need to balance that through either an increase in contributions or a decrease in withdrawals. Just laying out some of the mechanics of how a pension plan works. We can go to the next slide, Aaron. So one of the first criteria is to make sure that we are utilizing a nationally recognized firm to perform the calculation of our liabilities and our funding requirements. We use Aon. They're a very well recognized firm. The work that they do is very complex. We've got certified actuaries that perform those calculations, again, to make sure that we've got a good handle of what our liabilities and future retirement contributions will need to be. The piece that I would highlight, though, is as we look specifically at some of the benefits of utilizing them and how we incorporate that into our financial planning, we always plan to make the annual required contribution to the plan. That's part of our COP process, and we're going to talk through that here in just a moment, but that's a great impact for our employees in terms of making sure that the plan is getting fully funded. And again, the plan is to have that funded by 2034, 2035. We can go to the next slide, Aaron. So here's a critical piece. We were just talking about earnings, and this is called the discount rate, and it's looking at our long-term earnings over the next 30 years. What's a reasonable estimate? You can see that that's changed over the course of time. I will highlight from a historical perspective, it was as high as 9% in the past. We've reduced that over the course of time. We find this to be a very comfortable assumption relative to the 6.5 that we're using. We'll highlight that prior to what we've got shown here, we were at 7.75% prior to 2014, at 7% 2015 through 2021, and then we've dropped that down to 6.5%. And again, that's where we're looking at what do we think we can get as a reasonable rate of return over the next 30 years. And so we work on an annual basis with Siegel Marco. We're required to produce this as part of our pension reporting that goes through our annual financial report. And so again, we do this on an annual basis and feel very comfortable with the 6.5% moving forward. We'll also highlight that in 2021, we did make a pension contribution. We reduced it to 6.5% of 95 million to our decommissioning benefit reserve account, just as a highlight and a point to memory. We can go to the next slide, Aaron. So this is what we pay on an annual basis. This is determined by Aon. This is our annual retired contribution. And again, this is where we're looking at specifically what discount is being used. And we're then looking at if we want to have the plan fully funded by the 2034, 2035 timeframe, what would need to be placed, made payments on an annual basis. And you can see that here's the amounts that we've got in place from a historic perspective. Again, we include this as part of our COP. What doesn't get reflected here, and I'll highlight what we've got down here on the bottom, is that we've made additional payments. So as we look to increase our funded ratio, we made a $95 million contribution from the Deborah account in 2021. And then just this year, again in 2023, we made an additional $50 million contribution. So again, really trying to focus on the health of our plan.
Hey, Jeff, to keep it in perspective, I guess, how does that $64 million, how does that relate or compare to the overall payroll?
So
Percentage wise.
as a total of payroll, I believe we're about, John, if you've got that roughly.
Yeah, I believe it's,
Maybe 10%.
it's between 25 and 30%. I believe that's the level.
Okay, thanks.
So that's taking not only what we have to pay for our current employees, but also to make up for our retired employees as well. Go to the next slide. Here we've got our retirement plan funded ratio, and I'm going to walk you through what we've got laid out here relative to the metrics. We've got the funded ratio, discount rate, which we've just discussed, and then specifically how our fund is performed. Again, funded ratio compares our current assets with all of our future liabilities. We present value those back today. And the question would be, can we pay for all of our obligations today? And the response would be no, because we have additional funding to make up. And you can see that that's what the calculation is relative to our funded ratio. We could only cover 73%. Now, important piece is that we do pay all of our retirees. That's just a calculation for purposes of our pension funding and how you're looking at the pension from a strategic perspective, but that's very important to highlight where we're at. You will note here also that we're in 2023, that's actually at the end of 2022, so we're a year behind. So if we look at specifically where we believe we're going to end the end of 23, we'll get that information in August. We look at that, we've got the $50 million contribution plus almost a 12% return. We expect to be close to 76%. So a little bit of a fast forward for what we will hopefully see when we produce the report coming in this time next year. Also, you'll see from a retirement fund perspective, the return for negative 14.4. Again, that was last year's return. You would see 11.6 when we update that for next year's reporting. And then just some other factors that come into play as you think about items that impact your pension funded ratio. If people are living longer, mortality rates are extending, you'll continue, or life people are living longer, you'll expect that also that would then contribute to decrease in terms of your funded ratio. Again, that's requiring more payments over the course of time. And so we've highlighted here some of the other factors that do come into play. On the next slide. So as it relates to the recommendation, if the Finance Committee is recommending that we advance forward with this, if the board is so inclined to approve that at the board committee meeting. I'll go to the next slide. As we think about the strategic implications of this, we talked earlier about attracting, retaining, and providing a competitive set of benefits for our employees. As we think about Power of the Future 2050, we need to make sure that we've got and delivering a purpose-driven culture and future-ready posture, making sure that we've got the right talent available to do that work is going to be key. We've got a large amount of work in front of us as we continue to talk about. You've heard about that throughout the course of the day, and making sure that we've got trained, dedicated, and committed employees to do that is going to be key. Offering a solid benefit plan relative to retirement will be fundamental to that effort. With that, I'd open it up to questions.
Board, any questions? Any concerns about forwarding SD 14 for approval?
Concerns, could we go back to, I've just got a logistical question. Jeff, that 2023, that's January 1st, 2023.
Right.
Back one more, Aaron.
The matrix.
Yep.
There we go.
Right, so that 73.5% that I'm looking at is as of January 1st, 23.
Right.
So help me understand the lag here. We've got the return for January 1st, 24. We know what the discount rate is. Help me understand where the funded ratio for January of this year is.
So we just closed it's a great question. We all struggle with this slide. We just got the books closed. We got the reports from Siegel Marco. We've now got to give that to Aon and they crank the numbers.
Got it. Okay.
They'll crunch the numbers and that's why in August we'll have a more up.
August
Have this figure updated.
Would the likely be better than the 73.5?
Works. Great question. We're expecting close to 76%.
Yeah.
So this number was available to us August of last year.
Right. Yeah, I was thinking about like, we're approving this in April, at least in this instance, for a number that says of January 23. So I was trying to close that gap and understand it. Okay. That's all I had.
I would like just to make a quick observation. I'm going to tie these back to our vision, Powering the Future of 2050, and how important this is, and the relationship between the strategic directive and the goals that we're trying to achieve. And I think this is very clearly tied to purpose-driven culture and future-ready posture. Both of them require engaged people, engaged employees. Something that we've seen nationally in different surveys of engagement. Purpose has continued to be at the top driver of engagement, very closely followed by pay and benefits. I think this is important for us as long as we continue to have a healthy pension plan, retirement plan, everything that you just heard in the past 30 minutes. It's really important for us to continue to attract and retain talent so that they can then focus on the purpose of the organization and have this mentality of future ready posture that we need. I'm very pleased to hear these results. They're important for our retirees, they're important for our current employees, and they play a critical role in us achieving our mission in 2050. Pointing out the obvious, but it's a good way for me to bring that strategy back.
Thank you for tying that together. In some jobs, people are very well aware that any pension that they earned is their deferred compensation, essentially, is what it is. And it plays not an insignificant role in whether they decide to stay with an organization or even a profession at different times. So thank you for tying that in. So before I turn this back to the chair, I want to first of all articulate what CFO Bishop has already said. Tying in with the psychological safety things, there are multiple perspectives that go in to preparing the guiding documents that guide in the investment people in all sorts of ways. I haven't seen the ones that govern the 401k and 457, but I dare say they're very similar to the ones that govern the retirement plan. So it's not like, oh, they spin the bottle or find out who they invest with. No, very, very well thought out. And I want to take the opportunity to express appreciation and gratitude to John Thurber, John Petroulis, Tim Vasquez, Jim Anderson, CFO Bishop, everybody who works in the Treasury Department for their very careful and thoughtful work in looking after the retirement funds and the benefit trusts of OPPD for their employees, for the good of the community as well. So thank you very much. Back to you.
Yeah, so this will be action item for approval on the agenda. We'll finalize that later. No additional discussion necessary on the monitor. Great. So next committee up is the Customer and Public Engagement Committee, Director Howard.
Customer and Public Engagement Committee met on April 8th, and we had a legislative update, a customer satisfaction monitoring report, and a customer growth update. We've already discussed the customer growth update in the closed session, and so I'm going to pass it off to Lisa for the legislative update.
Thank you so much, Chair Howard. Well, one more day. I keep saying that, one more day of a short session. So of all the years I've been doing this, I think this has been the longest short session that we've experienced. So day 60 is Thursday. And will be the final day of the short session. So with that, we're gonna go over what we talked about at CPE, and then give it a little bit of commentary as well, now that we hopefully will be coming to closure. Seth Boyles, I told him over the weekend, take a break, bud. You need a break, so.
Short session that didn't feel short.
Thank you, Lisa. Everyone, good to see you all again. Hopefully this is my last time for this year. We go and get the next slide.
You on vacation till January, right?
No, I usually take 2 days off and then the federal kicks in almost. Federal's been going on as well, but then I can focus more on the federal. So you guys see, this is what we're gonna talk about real quick, the short session, updates on the key bills, and then our 2 big issues on the federal side. So we've been working on the federal stuff the entire time, but the focus has been on that. So next slide, please. And as Lisa said, this is the most important date on here. As we've all said, it's been a little bit of a bear. So next slide, please. So these are the key updates that we have on the big bills that we've been working on, trying to mitigate, water down, whatever you want to, whatever word you want to say to it. There's been a lot, so, and there's gonna be some more. The 1370, this was remember when this was first introduced, it was dispatchable for dispatchables. We'd have to have one running with the other. We've been able to get that down where as long, it's just more advisory, so we let the PRB know that if we're going to shut something down, they can give us recommendations back, just recommendations, not anything concrete, so makes it a lot easier. It's good for that. The LB 120, this is no foreign components within 10 miles around military installations. This is the new fun part that all legislators are doing. We've had 5 or 6 bills like this in the legislature this year alone. And it really boils down to no Chinese components in anything. We were able to get an out on that for us as long as we comply with NERC SIP standards for cybersecurity. We are out. We just have to let the PRB know that we are complying or we're not complying with SIP standards, and then that'll take care of that. The light mitigating technology on wind turbines, this is just so they can put a light on there. Some of the residents have been complaining that there's always that one red light that's always on during these things. This one is more of a sensor thing. Not for us, it's for the developers, but that was included in there. LB 969, this is on our sealed bid bill that we had. We first proposed to raise the sealed bid threshold up to $2 million. Compromise, we were going to drop that down to 1.5 million. That's what's included here, so that'll be good. Get some efficiencies and everything that we need here. And then 1260 is for Central Irrigation District. They had an issue that some of their board members were not able to vote for certain things, so they were irrigators versus, it's more of a house cleaning thing for them, but it got held up a little bit, but now it's good to be in there. LB 867, this was, the main thing on this one is just change provisions relating to the service on the Nebraska Power Review Board, giving them an extra term, a little bit more per diem when they do stuff, especially for the RSC person that goes to the Southwest Power Pool. Gets rid of the accountant position because they had a hard time finding an accountant to do that. So it's always a tough one on that. The rest of them are just fairly easy that they put in. LB 399, like I said, this passed 46-0. The way this was first introduced is light years different than what passed. Now, mainly all they have to do is everyone has to have a public meeting in the area where you're going to build it. You have to have one board member present and then half of your board online. However you do that, and then let the PRB know that you're doing that, taking notes, minutes, whatever you have, and then send that to the PRB. That was a provision Senator Brewer wanted, just to make sure that the county commissioners and the have their role, but then this also now you let the citizens come in one more time to air whatever they want during this process. If you support it, if you don't support it, whatever it is, he wanted just another bite at the apple on that.
Seth, when you say board member president, which board are we talking?
So if it's like, if we're building it, it'd be one of you guys would have to be there in person and then 3 more of you online. But it can be if, let's say, private renewable developer X, you're gonna have to have one of their board members too if they're developing it as well. And then half of their other board online as well.
So if private developer X is building it and we have EPA to take it to production, is it the private developers board or are we also, because we're buying?
It's the private developers board. I would probably say we're gonna be there anyway. to help on those kind of things, but the private, whoever's building it needs to be either to do that kind of thing.
Thank you.
Next slide. These are the other ones we've been working on, LB 43. Today's meeting is reflective of that one. LB 61, our dark fiber, we probably got 70% of what we wanted. We're pouring through these things now to make sure we have what it is. LB 304, membership dues for lobbying fees and disclosure. All this thing, we have to list all of the groups we belong to, whatever kind of stuff put on the website somewhere. All the eminent domain bills, none of them got out of committee, which is good. We'll have a bigger discussion with Senator John Kavanaugh in the interim about that to see where he wants to go, if he wants to go somewhere on those. LB 1234, our weatherization funding. And no opposition, NDEE even said they could spend the money and we couldn't get a nickel on that thing. It's just one of those years. I think next year when we come back, we're gonna drop it, instead of $1 million each year, we'll drop it down to 250,000, 500,000 for the first year, and then same for the second year to see if that helps. We're kind of getting those things, just keep building it up best we can. LB 1218 on the electric vehicles. We oppose this, and the reason why is because they have a right of first refusal on there. So saying, if we want to build, OPPD or any public power utility wants to build a DC fast charging station somewhere, we have to put it on our website that we're going to do that. We have to also put it in a newspaper that we're going to do that. And any private entity can say, no, we'll build it, and then we're completely out. So that provision there, we didn't like. We helped them write the kilowatt hour part so they could actually get the federal funding to come in and build these things. We were okay with all of that stuff, but when that came up, that was one of the parts that we didn't like. Now, again, this is better than where it was before. At first, they wanted us to waive all our demand charges, wanted us to guarantee an EV rate within 3 months or 6 months, want us to provide them wholesale, the power at wholesale, and then also get us completely out of the business whatsoever. So it's better than where it was. Provision still, not the best. We're figuring out what that's going to look like now. That bill is included in LB that's in 1317, which is still up on Thursday. So we'll see where that's going to go. We'll have to see how that's going to be. LB 1277, this is our potential NEMA changes. This is about the ice jams, just making sure that, when you have the ice jams there, none of the counties are harmed. But the counties really want us to go through the county on all of these things, even though they may not have any harm, and it may prolong the emergency part. We're working on this now. We give them other examples. If a tornado came through and just tore up, our transmission lines and our poles, there's no harm to the counties, but there's harm to us. There's God forbid, a cyber incident. There's no harm to the counties, but we have to have something where we can get this up and moving. The governor's office is like, well, you can just call us. NEMA still on the other side. That's great that we can do that, but most times when we do this stuff, in order to prompt some of the conversations, we have legislation. So we'll have to do that. 1358 board salary increases, that was included in LB 1300, which we'll talk about in a second. That's we're doubling up the salaries for everybody. It'll be good. You guys will have to vote that in though. Then LB, that was included in LB 1300. This is Adopt the Pacific Conflict Stress Test Act and Foreign Adversary Contracting Prohibition Act. Again, this bill started out one way and it ended up over here. When this bill first started, we'd have to list all of our critical assets, how we're protecting them, how we're not protecting them, and then publish that. Make it a public report. Well, obviously, that's not how you defend anything. But there was only 2 of us that opposed it, Public Power and Black Hills Energy. Everyone else did. So we're already kind of boxed in a corner on doing those kind of things. We lobbied hard on that. We got some good changes on there. There's still some onerous provisions, and but that passed with an E clause on it. Still has 1358 in there as well. So Steve Bruckner and everyone is looking through it now to see exactly what our obligations are. And then we'll kind of make some decisions after that of what we are going to do. Has in there that you can audit our pension funds, all those kind of things. It's how that helps with Nebraska security and national security. We don't know, but it's kind of where we are on that. We were the lead on this for a long time, and I think we're the ones that help get it to where it was, because if not, it could have passed as is, and then just wouldn't have been very good for any of us. The other one's on the other side, Septic Solar Practices. We had a great meeting with the Attorney General, which I told you about before. It looks like they are going forward with the lawsuit, so they're trying to look at certain things that way to go after the bad actors in this, which everyone seems to support, even the solar installers. So like they're giving them a bad name to get them out of there. Economic development and incentives, a lot of that stuff was dropped this year because it was the sales tax and other tax issues that were on there. So imagine Nebraska kind of reprieve this year, but it's more than likely coming up again next year. Rail issues, open meetings, digital currency, all those issues are still out there. Little things here and there, but not anything too major that we have to look at. A lot of those we're just monitoring. They impact us a little bit, sort of, but it's more kind of 2-3 steps down the road from where we are, and those kind of things there. So that was the bulk of what we had in the short session, the longest short session in history. At a good line that I started co-opting was on one of the days we were there pretty late. It was a Tuesday, and another lobbyist was like, "This is the longest month of my life." He was talking about that specific day. So it was, we all kind of nodded and thought, yeah, that probably was. So any questions on the state legislative stuff?
Is there potential for a special session still?
Yes, I have heard of probably 2. First one will be on property taxes, because they're just not going to get there. They're probably going to get 20% instead of the 40% that the governor wanted. So that's more than likely going to happen. Now that they're talking about timeframes, rumor I heard now is August. See what that is. And then the other one that is still just a rumor is the winner take all. If they can get if they can show they have the votes, they will bring this out. I've even heard that could potentially be after the November elections in a lame duck session, depending on how the elections go. So. Just report of the facts.
So, but
And the rumors.
Yes.
special sessions are limited to single topic issue.
Yes, so if it's on property tax, that's be related to property tax.
Multiple.
Yeah, I don't know if they will though. A lot of senators have already said they are not coming back no matter what. One senator will more than likely be in the Ukraine. This is all going on as well, and they need every vote that they can get.
We need 33 to go in. And then when we talk about single subject, every bill has to relate back to the single subject. So we've been talking about this because
No Christmas trees.
no, you can do Christmas trees, actually. It runs like a regular bill, right? Like they would convene, you would introduce bills on the first day relative to what the subject matter is, and then it runs the course of a regular bill. They have hearings, they give notice. It takes a little bit longer because you give 7 days notice, but people are still getting paid for not doing anything. You're just checking in. But the challenge is we've never tested single subject with something as broad as property taxes. And so there are a multitude of bills that could relate, right? Like if you think through, like every package that's going on Thursday is related to property taxes. And so we've never tested it. So I don't actually know if that single subject would hold and then what the contents of that special session would look like. I think that nothing would impact us, but you honestly never know. Like they could put a tax on parts that we use, they could put a tax on things like that in order to like make the governor's request whole. And
Well, at some point, the sales tax on utility bills was going to be eliminated at one point.
Yeah, they had it in there, and then when they didn't have their money, they couldn't pay for it, so they took that out. But Director Howard's exactly right. They could have us help pay for whatever it is. They can pay for it to make sure it works, and that's why we're gonna stay vigilant on it. Most times that, see where they're gonna go. I just don't, as of right now, they're probably low third, but they can do it anyway. And if Senator Brewer's in the Ukraine, he's not coming back for that. Senator Halloran, with all the things that he went through and that he did, he is not coming back either, no matter what they do. So you're down 2 kind of confirmed votes from the governor's side that just aren't gonna do it. So it's gonna be very tough to see whatever they get through to get done. So. Any other questions on the state stuff? Very good questions.
does 1300 have an emergency clause?
Yes, 1300 does have an emergency clause. So we're Steve Rucker's already looking through it about our obligations and what we need. to look at.
Sorry, that means that it's, once signed, it immediately goes into effect. Is that right?
That's right.
And that's gonna be a hard bill to get the timeframes down anyway. They have to, on the Pacific conflict part, they have to set up the committee, they have to do this, they have to do that, they have to get everyone convened. Then within 180 days, they have to already get some of these reports out, and it's gonna be a very daunting task for them to do that. On the good side for us, 1358's on there. As soon as it's signed into law, we can do that as well.
Who's them in that case? Those things that you just described they need to do.
The Pacific threat,
Reporting.
yeah, what we have to do on the
Onus on
report,
us
what
for
are our
reporting.
obligations.
When you say, right, that's what I'm trying to understand is like, there's not something that has to happen through state government that needs to get established in order for us to get going. What you just said is that this immediately starts us moving.
Yeah, we're getting ready to look at the obligations of what it is now, but the committee still has to get set up and they have to get all those things. I think that we'll have a little bit of time while that's happening, but we still have obligations of what will.
The compromise here was, the original intent here was, let's publish all this information.
Right.
So instead of doing that, there's a committee that's gonna be formed. That committee will then request hearings so that they can receive that information in a secure manner.
Got it.
So here, the committee has to be formed, they have to figure out the rules, how, and eventually we will get engaged with it.
Is this a legislative committee or an executive branch committee?
It's a mix of both, so they'll have, I think it's 5 members on the committee, and then there's 4 non-voting members from the legislature that'll be put on. The executive committee has to figure out who those 4 are, and then the other ones have to actually start meeting and do the secure briefing so they can figure out what that is. Now, some of the things on the reporting side of it, I think the agency head who's in charge of that can start those audits as soon as they need to. And then there's also a part on supply chain that it's some very wonky writing, but we have been told that as long as we comply with SIP standards again, that we won't have to do that part of the contracting side, but it's not written well, so we got to figure out what that looks like.
Do people on this committee have security clearances or, this is
No.
like important information that we're giving them and will there be, sidebars in place so that that information isn't leaked out somehow and?
We are hoping to. They said that it has to be to a national security standard. And when we asked, well, what's that? They're like, well, it's a national security standard. And it doesn't have handling instructions about information that we're going to be giving. It has none of that kind of stuff. None of it. So,
We'll have to establish some kind of procedures then.
yep, because if not, I don't know.
Before we start reporting this information to them because.
Yeah, because I don't think anyone's going to give them the information if it's not secured somehow.
Right.
Because like the big thing that they say, well, if it's leaked out, it's a class 3 misdemeanor, which is 90 days in county jail and a $500 fine. Well, with good time, I think it's 50, some lawyers got to tell me it's 52, 53 days is all you have to do. So you could release all of the critical information of the state and then 2 months in jail and get a $500 fine. It's one of those bills that we try to get more of a coalition to come out against it. We talk to everyone because this impacts everybody. Railroads, transportation, healthcare, everything. Even the elections folks are going to be included on this too. And everyone's like, well, I don't think they're going to be able to implement it. Oh, if they're going to implement it, they have to, but it's just one of those things that the power industry was the only ones really going up against it. So.
I guess I'm wondering, as this unfolds, curious about, I think this is a question for the board. What are we hoping to monitor, know, as it relates to how this unfolds? I mean, I think if this doesn't go well, there's a risk to us, right? So I'm just kind of wondering to what extent does it make sense for the board to receive updates on how this is going, and whether or not it's going well, or if it's messy and what the risks are.
Steve,
I'd be curious to understand how it's unfolding, but I'm but one board member.
Well, right now Steve's he's going through it to see what we have, and then we will absolutely brief everyone.
I would say, Director Moody, you make a very good point. And I think your desire, as you expressed as one board member, for an update at some point on how this has been implemented is appropriate and wise. And I think I would include that in my recommendation. It's still early.
Yeah.
but I think it's an important oversight issue for the board.
I think it's important also, I mean, from this perspective, it's a governance, it's a compliance, are we complying with that? I take a lot of pride in what the board is already doing, and this is one of the reasons why I was very supportive of the path we were going in here is we have SD12, which was recently revised. You know, the board gets good information about our cybersecurity, physical security posture. We get quarterly updates and briefings from our enterprise risk management, which includes a healthy dose of cybersecurity briefing. So from that perspective, I hope board members feel you're informed, and we're bringing these same topics to your attention on a regular basis. What these legislative bill does is add on to that and now share these critical information with other parties. Lots of concerns about security, clearances, etc. And it's are we in compliance, and how are we going to comply and share that same information? But I think for the benefit of members of the public who are watching the meeting, and just to state this out, we're already doing this type of activity with the board in a secure manner. This wouldn't add anything that we're not already on top of and informing the board.
Thank you. Any other questions about the state stuff? All right. Next slide, please. Go to the federal. Same thing we've had here, the microgrid for Offutt. As you all know, we'll report on this before. There was 41 million authorized in the defense authorization last year. Still pouring through all the appropriation stuff, and we're going to do this. The good part is that the Department of Defense and others have said, yes, we are going to fund this for Offutt. Now it's just more of a time frame of when we can get that money done and appropriate it to wherever we need. So that's good. The word of language is the Water Resource Development Act. This is a Senate, House, a Congress congressional bill that happens every 2 years about water issues that you have, infrastructure, all that, Army Corps of Engineers and others. This to address the ice jams on the Missouri River that we've had. So far, so good. We're still in the Environment and Public Works Committee. Senator Ricketts has been very good ally to us in this and getting the language in the Senate word of bill. We're working with House folks to try to get that in the House bill. So if it's in both, we should be good. The chair of the House Committee, Transportation and Infrastructure Committee, is out of Missouri. So they've had issues with this, with adequate flows before too, with Ameren and others like that. So they have a stake in those kind of things. We'll get a little pushback at times because having adequate flows, people get worried about flooding, but I don't think that we have to do too much on that, but we are working through that. We've got some questions on those kind of things. We're working through that stuff to make sure we can get that in there so that the Army Corps of Engineers can have a better management plan, winter management of the Missouri River, to make sure that we don't have any more ice jams. So that's a long process. WRDA used to be a lot easier. You'd have Senator Barbara Boxer and Senator Jim Inhofe, who were as far apart on the political spectrum as two people together. And I mean literally as far apart as they've been, and they compromised on this every 2 years, and it sailed through. So we're hoping that they keep doing that going forward this way. We'll see. That's where we are on that one, and I think that is it. I think that's all for me. So if you guys have any questions on the federal side or state? No. Been a good team effort. Couldn't do it without all these folks, subject matter experts and everyone else.
And Dr. Howard, I'd just like to thank the board for your support and the engagement of my colleagues and the CPE committee as well as the full board. But Seth, thank you for this. Has been a heavy lift for the entire district. And I want to thank all of the subject matter experts because there were a lot of moving parts. And the things were happening quickly. So thank you for the grace to let us have our positions, but then to be some flexibility on that as well.
We'll pass it over to Tim for an update on the SD5 customer satisfaction monitoring report.
Thank you, Committee Chair Howard. I'm Tim McRavy. I'm Vice President of Customer Service. I'll invite forward Matt Hardback. Matt is our Director of Customer Experience and Operations, and we'll have the pleasure of sharing some results that we're very excited about compared to last year's monitoring report, but of course not yet satisfied. what you'll hear are some great results around how our customers perceive us from a satisfaction standpoint, as well as some macro trends and environments in which we operate and try to drive customer satisfaction. So Matt, over to you.
Thank you. All right, before I get going, I wanted to give a quick thank you to Lisa, Kate Thomas in the back there, and the whole public affairs teams. They were very helpful and collaborative in bringing us together. So thank you for that. Okay, so Aaron, next slide, please. So if we jump into SD5 and look at the language, it calls us to do a few things. The first be top quartile performance and customer satisfaction in similar size utilities in our region across all customer classes. Additionally, it asks us to do respectful and dignified and civilized manner in terms of our engagements with customers. It talks about a procedure for customers who feel like they weren't treated fairly. And then lastly, provide updates to you in terms of customer trends. Aaron, next slide. Brian. Okay, so if we lump those together, they really start to show up like this. First, share the big picture. Next, we really see give the customer a voice. And then lastly, we need to measure, understand, and learn from our engagements with customers, and then respond effectively. Now, one thing to note here is talking about dignified and respectful interactions with customers. That's going to be lumped into that last bucket. We feel like those kind of measures really show up really effectively in our syndicated studies, which we'll talk about later in the presentation. Next slide, please. Okay, so last month we talked about customer trends. So I'm going to do a quick highlight about this. Starting at the macro side, still seeing economic pressures. So we're seeing inflation, lower energy assistance, and other things on customers' perceptions of pricing, which drives customers down and their understanding of how those rate pressures are potentially harming them. On the industry side, what we're seeing is not only in the Midwest side, but across the industry, we're starting to see customer satisfaction go down. We will talk about that when we get to the JD Power and the business side of Escalent, but a lot of that due to perceptions on pricing and affordability. And then lastly, for OPPD, we're actually performing pretty well, but we're still feeling those economic pressures, our customers are. We're doing quite well in that. Because of some actions that we've taken on more recently, in terms of flexible payment options, making enrollment and level pay and payment installment plans easier, digital. We even did a really interesting thing I found, which was our inaugural assistance campaign in Spanish, which led to a 46% increase in calls from Spanish-speaking customers for that assistance. So we were doing some really proactive things to try to help our customers here. So really excellent work on all that.
Muy bien.
Excellent. Okay, Brian, next slide, please. Okay, we're proud. We have to give our customers a voice. So we're proud to offer that we do multiple things online, as well as through phone, and then through in-person engagement. So either at the board meetings, such as this, either in field calls, working with customers, or at community outreach events. So as the board has witnessed firsthand, we try to monitor these customer contacts as best as we can. Matter of fact, we have a dedicated role that ensures that when we have a customer contact, we try to connect that with the right employee internally so that we can resolve that issue as quickly and diligently as we can. Okay, Brian, next slide. Hey, before we jump into a lot of the stats and the numbers around our syndicated studies, I wanted to pause here for a second and say syndicated studies, while in a retrospective view are very important, we also do a lot of other things to understand how our customers are dealing with us and what their engagements have been more on a real-time basis. So you're starting to see some of that show up. And the syndicated studies really provide us with, not only are we mashing that up with our kind of more real-time studies, but they provide us year-over-year measurements to understand if we're moving directionally in the right perspective. So, okay, on to the next. JD Power. Okay, so if we look at JD Power, they're a research vendor. So they measure 400 unique customers across 6 different categories that you see along the bottom here. So how that works is every quarter, they survey 100 unique So in quarter one, they survey 100. In quarter two, they survey another 100 unique, and then they put those two customer groups together. It's that those customer sets continue to build on each other. We get those results 4 times a year. Okay, so what you're seeing, the really good news here is we're top quartile in residential. So that's excellent. We've been doing really well. We're third in our peer set. Now, the more challenging news is that our score fell 8 points, down to 731. But we're seeing less in our scores than we are in our peer set, which fell a total of 13 points. Now, not only in the Midwest are we seeing that, but as I mentioned earlier, we're seeing that across the industry. Now, once again, as I mentioned prior, price has a piece of this. You're seeing that show up kind of in that second bar graph from the left here. So we've scored pretty well across all the different segments here. And one I wanted to highlight is power quality and reliability. So really excellent work there. Of course, that takes all of OPPD to get that to be as providing that greatest scores as we are there. Now back on the pricing thing, as you can see with it weighing 20%, and as customers continue to feel the economic pressures, which I talked about on the trend slide, you can see how that can draw down the overall score. Now, what does this all mean, of course, for OPPD? Economic pressures continue. We're not immune to that. Economic fatigue customers want to understand the value at which not only are we bringing to them, they want to see reliable and affordable power. So that's really critical. I guess to sum that all up, we just have to do our core work with excellence. Brian, next slide, please. Okay, another look at the quartile view from JD Power again. As you can see on the right-hand side of the screen, doing really well. We scored well above our industry average and well above our peer set in the Midwest midsize. Now, competition in that group is really tough. Some may be slightly ahead of us in technology offerings, but we feel very confident in what we're doing with our customer engagement work, and we know that eventually those will continue to rise our scores. Aaron, next slide, please. Okay, on to the business side. Now we use Escalent's Cogen study on this. It's very similar to what we saw on JD Power in terms of what they're looking for, even though you'll see 3 different segments at the bottom. The ambiance behind the material and the questions are driving to the same kind of things that you would see in JD Power. Now they do measurements twice a year, so we only get scores twice a year on the business side. So that's one difference between the two. But the great news for this year is we're top quartile. Once again in business, we had significant lift in a number of these categories, which is fantastic. Now, while we have confidence in Escalent's and our own survey sample size and performance, we're still trying to make the correlation between the large lift in scores and actions on our side. Now, our own internal surveys would suggest we have a small and medium-sized business team matched up with our larger key account team. Those seem to have significant performance in terms of how they're supporting our business customers. So our internal data would say we would point towards that. Now, anecdotally, we've heard our customers talk about how OPPD is supporting not only them as a customer, but also our community. So I think that seems to show up as well in the scores. Aaron, last slide for me. Okay, one more look at the quartile view in terms of business. What I wanted to highlight here was well above industry or our peer set here. So that's fantastic. Really great news. That's it. That's all I have on that. But I wanted to share, while we're pleased, as Tim had mentioned, we're not satisfied. There's a lot of work still to be done. We know and we greatly appreciate the position we're in to help not only our customers, but our communities as well grow through this. But we know the work's not done. So we'll continue to push towards providing new value to our customers. I'll offer up for any kind of questions you might have.
If I may, before questions, Chair Howard, something that it doesn't officially make it into this report because we're measuring 2023, but I think it's important for me to share with the public, and it's just a measure in time, but Q1, first quarter of 2024 for residential J.D. Power customer satisfaction, not only did we rank in the first quartile, we were number 1. And I want to highlight that because it's a source of pride for the team. We've been fighting really hard in a good fight to get not only to the first quartile, but now we made it to the number 1 position in our category, which is gigantic. It's really satisfying to be in that position. It's just the first quarter. Right? There's still many quarters. We don't know where we will end in the year. But I did want to take an opportunity, especially in these monitoring reports, to highlight that it's a source of pride, and I want to thank you, Matt, and your team, and Kate Thomas for all the work you've done.
Chair Howard, if I might add one other concluding remark, I hope that, like so many other of our strategic directives, one group gets the pleasure of sharing the results, but that's representative of the work of the district. So as OPPD people have seen these results in particular, I hope that all are connecting their efforts either directly or indirectly to those sort of results and feedback from our customers. I look at power quality and I leaned over to Troy and just said, thank you, right? That's not my team that produces that. That's the work of Brad's team on a planning perspective, Troy's team on an execution. I look at brand trust and think of all the engagement that Lisa, Kate, and their respective teams have. And that goes on and on. So I just wanted to acknowledge that hopefully we all are connecting with these sorts of results. Thanks to that.
I assume the entire staff has been made aware of this.
We have, yeah.
Good to hear.
Chair Howard, back to you.
So this is the SD5 recommendation. Does anybody have any questions or concerns? I think CPE has worked really hard to make sure that we're meeting the needs of the board in terms of what we're reporting, in terms of customer satisfaction. And so are there any questions for us about it? To me, that says we're doing something right. Okay, so that's the SD5 monitoring report. Tim, Matt, thank you. And I think that's CPE res. Any reflections? Re-rest.
Just add congratulations, because,
Yeah.
yeah, you see how all the strands from all the business units and from top to bottom, they all work together to great commendation and confirmation that super work is being done.
Echo. Quick, just reflection on strategy here. As you all know, we're working really hard on our advanced metering infrastructure, AMI projects, and that is how this connects to the strategy into 2050. Two-way communications, constant communication, relevant communication, and information with the customer is essential for that vision. That rests on the foundation of having a really solid relationship with the customer. None of these equipment infrastructure investment we're making will work if we don't have a willing party to engage with us. So I think paying attention to the customer satisfaction, both at residential and commercial level, is super important, being on the top quartile, because it will make those investments we're making a lot more effective. We will be able to engage better.
Okay, any other reflections? I always forget the reflections slide. I'm like, let's go. Okay. Oh, with that, CPE rests. I'll pass it back to the chair.
Perfect. That's the last committee for the morning. We're gonna take a break for lunch and we'll come back at 12:30. 12:30 for ongoing updates from Systems Committee. We're back. Back, everyone. It's 12:32. For our afternoon agenda, we'll start with the Systems Management and Nuclear Oversight Committee with the chair report from Director Moody.
Here we go. The agenda is in front of you. We did meet on April 8th. A few things to note from what's up there. Dr. Bogger mentioned item number 2 in her governance chair's report, so I won't summarize that. She did a wonderful job. We'll talk about the SD4 monitor report here in a moment, as we'll also talk about North Omaha 5. SD7, a couple updates for you there with respect to the timing. A few things to note. You all, I believe, have an email with respect to scheduling time with Mr. Fleener to talk about the SD7 revision schedule, getting your input on the direction that that's headed. So those meetings will happen in April. In June is when we expect this to come to the Systems Committee for first look. So that we expect that to happen in June, and also June being the time when we will all see in our all committees meeting sort of the first iteration draft version of what some of the SD7 revisions might be. So naturally, the team is doing its homework and talking to us in advance of that, so that our perspectives are brought into that discussion. And so really, if the schedule continues as is planned, that will be the start of the 30-day clock, so to speak, when we have potential revisions to SD7 that will be shared with the public for their 30-day comment period. And then the board, we don't have a meeting in July. And so those comments will start to come back at the end of that 30-day period, which will allow us as a committee to take them all in, see what we've got, and inform our discussion come August. We'll take a look at those, be with the Systems Committee to review that feedback. So that's what's in front of you. That's the planned course of events. As we all know, depending upon how all these conversations unfold, we'll have to just kind of adjust as we go, but that's the current plan that we're operating. Cliff, did I miss anything important there in terms of that schedule?
No, I think that's pretty much right on. Right.
Great. And then back to the agenda, board work plan and summary of meetings. So those are the highlights from there. So let's go on to the next agenda item if we can. Looking at a labor contract for NC2.
This is Scott Edom, our Director of Engineering for the generation side of the company.
Good afternoon. It's Troy Sadek, Scott Edom, Director of Engineering Services for Utility Operations. So I'd like to talk about the Nebraska City Station Unit 2 ash segregation project. So a little background. Operation of coal-fired units creates 2 types of ash, fly ash and bottom ash. So Nebraska City 2 is included with that. As part of the original plant design, Unit 2 fly ash is mixed with the wet bottom ash and then discharged into disposal trucks for transport to the landfill. This design is unique to Nebraska City Station Unit 2 for our generation fleet. Under certain low load unit conditions, a sticky mud-like mixture can be created with the ash streams. Disposal of that ash mixture has caused safety incidents and equipment damage. Multiple workarounds have been implemented in an attempt to make this process safer, but the best answer for safety of personnel and equipment is to eliminate the safety hazard by separating the 2 ash streams. This new project will route the Nebraska City Station Unit 2 fly ash to the Unit 1 equipment for disposal separate from the bottom ash stream, thus no mud-like mixture, and mitigates the safety hazard. Aaron, can you go to the next slide with the pictures? So these are representative pictures. On the left are some hoppers and representative piping and a pneumatic skid that will help transfer the ash. These are just similar pieces of equipment that we'll get as part of the project and are not actual. We have awarded other minor material contracts that were less than 500,000, so not under the board's purview per se. So this contract is for the labor and installation of that equipment and some other minor materials. We did select the best bid from the three that were submitted, which were all legally and technically compliant. So we are recommending that the board of directors authorize reward for this RFP 6130 to Extreme Precision Industrial Contractors. Are there any questions?
History of work with the vendor?
This will be the first time.
Okay.
So we are pretty confident in their capabilities based upon the RFP submitted, but it is the first time we'll be working.
All technically and legally responsive. That's good news.
Correct.
Colleagues, any questions?
Okay.
You're done. I think you're good.
All right.
Thank you, Scott. All right. I'm excited to move on to the SD4 reliability monitoring report. As a reminder, we do have made some changes to SD4 this past year to look at some new metrics. So this is the first time we're going to get a look at how those shape up. Turning it over to you, Troy.
Yes, this is Clint Zabadale. He's our Director of Asset Management. And we'll be talking about both the old and the new metrics involved with some changes. So he'll cover some of that. I'd say it's a for the most part, a pretty good news story here. There is some work yet to be done, and we'll highlight that.
Thank you. In case anybody didn't catch it, since I'm up here being loud, I'm Clint Zabadell, Director of Asset Management. Here to talk to you today about our reliability monitoring report. First up, just a summary of the actual verbiage that's in Strategic Directive number 4. We have 4 areas that we look at. It's energy supply, generation, transmission, and distribution. And there's a total of 5 measurements or 5 standards that we look to uphold within this group. Next slide, please. So bottom line up front, here's a quick summary of it. 5 measurements we have, 4 of the 5 are meeting our targets. 1 of the 5 being generation, and that is the metric that was changed for this year, is still falling short of the target. And we'll go into a little more detail on each one of these as I go through the presentation. Next slide. All right, first up is kind of the top line, right? We met our energy supply requirements 100% of the time. Next slide. All right, to talk about that, we did meet the customer's energy demands 100% of the time over the last year. The way OPPD does that is through our own generation, our purchase power agreements, the generation we are contracted with, some capacity contracts, and our membership within the Southwest Power Pool. That membership provides access to generation on other utility systems, as well as the transmission to get it to our system. Did have it at 100% of the time last year. That isn't to say there weren't challenges both in the summer and the winter time. And this is really where that reliability touches resiliency and resource adequacy. So my intent today isn't to dive really deep into the requirements of resource adequacy. The energy was there for the full time last year. Next slide, please. Okay, transitioning to generation. This is where we had the red X to begin, and I'm going to cover both metrics as we go through this. Thank you. Starting with the old measurement, this was the equivalent availability factor. And what that really means was how often was our base load or our coal generation available to serve or to generate electricity over the period of the year. You can see that even on a 3-year basis, that trend has been below our target. And it's the end of the year in the 3rd quartile for the year. That was driven by major planned outages, some findings within those major planned outages, and the forced outages. So anytime a unit's not able to be operated, whether it be for planned maintenance or for forced maintenance, that's what went into that metric. And at the end of the year, we landed in what we call 3rd quartile performance, where the target was first. I'm going to switch gears to the next metric, which is the new one. So the equivalent forced outage rate, this is the updated one. We updated it this year to reflect, I would say, the broader context, right? To look at all of our generation fleet. Includes all the generation assets. It's aligned with SPP's measurement of accreditation. So again, you see where we're touching SD9 and resource adequacy with reliability. And what it really is the ratio. It's the ratio between how much you had in forced outage time versus how much you actually generated with the unit. So it can be For small operation or smaller units that don't operate as often, it can be kind of a sensitive metric. We had a presentation on E4 with some of our craft, and one of the maintenance supervisors, I won't cite his name because I didn't get his permission. He goes, I look at this like owning a boat. Said, if I own a boat and I intend to take it out only on the 4th of July weekend, if I go to take it out and it doesn't work, that's a 100% forced outage rate. Doesn't matter how reliable it was for the rest of the year. That really kind of brings that to life. It's a ratio versus how much you actually needed it. And for our fleet, the message here is really the same as it was for the base load and the coal units. We were in the 3rd quartile.
It may be obvious, but the green
Yes.
is where you really want to be in. So,
Yeah.
you know, the graphics flip, so I just wanted to highlight that.
Yeah, so thank you for that, Troy. The target line that you see there is at 8%. That's a mid-second quartile based on, say, a fleet across the nation of similar units of similar classes. If I was to share a theme with, what's going on here between the previous slide and this slide, is that we have changing context going on for our generation assets. If you wind back several years, we've had a decreasing amount of total generation with an increasing amount of starts. So we're using these assets differently, and it's putting some stress on them, and that's caused us to do some catching up, and we've been working at that. One thing I wanted to share on that point is we have a total of 16 turbines throughout our own generation fleet. Over the last 5 years, 13 of them have had major overhauls performed. So it's kind of a reflection of that catching up and that change in context that we're trying to, catch up to.
And just a quick note here, 16 turbines and generators today, and we're about to add another 11 at the end of the summer between Stanley Bear Lake Station and Turtle Creek Station. So this measurement becomes even more important now. We have a lot more of these generators, opportunities for them to fail, and importance for us to maintain them really well.
Yes. And that was another part of the reason we updated the measurement, because our fleet is changing and the way we're utilizing it's changing, not only from the accreditation basis and lining up with the industry, but also just a recognition of the importance of all of those units to our overall. It's different than it was 10 years ago when we started.
So this is only owned generation. This is not power purchase agreements or any.
We don't have access to their gas data, which
Okay.
it's a national database. It has rules around how do you submit. We don't have access to that. If we did, we would be able to, have conversations about the entire fleet.
And this is this forced outage just mechanical, or does this have to do with the ice jam and all of that? Is that included in this?
Or any cause. So anytime the unit was unavailable,
Okay.
That you weren't planning it for it to be unavailable. It includes D rates as well. So anytime it's not making full output.
So you mentioned that the shifting for operating equipment on the grid is likely leading to some of the impacts, including increased overhauls and some of the negative consequences we're seeing. I've heard you mention new turbines coming online, but the new equipment is all designed to operate with more frequent starts, right?
So let me hit on something there. So age has a factor too. As things age, you have to replace things. So we've just hit that period, just like with your house, you go through stages where you have to replace a few things at a time. I would say that that's what our generation kind of looks like right now. We're through that stage where we're trying to. He's right, like the peaking units are having to start and stop more than they used to. So that's expansion, contraction that's taking place. And so that's what they're built to do. But as they age, that becomes harder, on them. And so we have to make sure we're maintaining them properly. The new units, yes, they're meant to be fast start and things of that nature. I will tell you the first couple of years of new units, you have to work through bugs.
Mm-hmm.
And so we'll see that show up over the next few years as those new units come on. But there should be a period of time after you get through that where they're pretty solid until you have to get to the next stage of maintenance and major overhauls and things of that nature.
Yeah, just you talked a little bit about reduced generation. So on the coal fleet, those units now cycle down to the minimum load and back up more frequently than as well. So
To lower levels than they were actually originally designed for. So that adds a lot of flexibility in the market, but it puts stress on the units.
So just quick stats, we're generating about 30% less total megawatts in a year than we used to. We're doing it with over 3 times as many starts to get there, so. Okay, next slide, please. All right, in acknowledgement that both of those metrics, the old and the new, are below the target where we want to be. I want to talk a little bit about the things we're doing to improve. One of the ways is our asset management plans. That's, you know, near and dear to my team's heart. They're driving overhauls, inspections, some of those things that we already talked about. But it's also been expanding the inspections. Last year, we expanded the high energy piping program. This year, we're going to be sending out more large electric motors proactively for overhauls. We've put together a GRIP team. That's what we're calling it. It's Generation Reliability Improvement Program. And that's a team that includes members from our craft, our operations and maintenance group, work management, engineering, and asset management. And really what they're charged with is basically combing through and trying to rapidly identify risks and bring those forward. They have done some of those. Some of the things that have shown up is like the water plant, which tends to be not a focus or not front and center until it could be, and they've gotten ahead of that. But rapidly reducing the risk is that team's charge. We also continue to build out the reliability centered maintenance program under the EPRI model. So that's the way I pose this. Within generation, a lot of things have to go right. In fact, thousands of components have to work in order for the unit to generate. What that program does is ensures that you've given each of those components the due consideration for how critical is it, and then what are the failure modes and what needs to be done to ensure reliability, or just make the conscious decision that that is a component that can be allowed failure. But that's the way I put that, is that's completing the net. But it's a large lift and it's going to take some years to get that all in place. Then last, the change in the way we're measuring reliability, that has had a meaningful impact. What that allows us to do is schedule the units for longer outages without negatively impacting our reliability measurement. This year, days have been added to our planned outages based on that new measurement to do more work while the units aren't needed, so they're better when they are needed. And there's been some improvements. The latter half of last year, Nebraska City had some record duration runs. North Omaha performed very well throughout the year with virtually no boiler tube leaks. And our combustion turbine reliability is improving. But I want to hit, it is, you know, this fleet of generation assets, they're large, they're old, it's a big lift, and it is going to take some years to bring about the kind of benefits we want to see. Okay, next slide. We're going to now switch over to the delivery side of the system, starting with distribution. Next slide, please, Aaron. The first one is, I'll say my favorite story to tell, and that's for Sadie, where we have this ongoing downward trend below first quartile performance or better than first quartile performance. Just a reminder, Sadie is the duration of outages experienced by our customers. And we're very solidly in first quartile performance here. Next slide, please, Aaron. The message is very much the same when we look at safety or the frequency of outages. Strong first quartile performance, again, been there for a number of years. And one of the things I want to talk about here is both of these owe this improved performance and this performance trend to some intentional moves that date back to 2017 when they weren't necessarily performing like this. I'll highlight a couple, specifically O&M and capital investment for vegetation management and cable replacement. But those are just a couple of the programs where we identified it, went at it. These are the kind of results that we've been able to achieve there and what we want to see over on the generation side.
Just to link this, the JD Power results that we look at quite frequently is reflective of this type of measures. So they match up quite well.
Yeah.
So the fine print down here says excludes major event days.
Yep.
Can you explain
So
what that would include?
So the
Just a
IEEE.
thunderstorm that went through like this morning?
It wasn't that, but if that thunderstorm was severe enough to be a statistically different event,
Okay.
it would be qualified as a major event day, and IEEE sets out the standards for how you
Okay.
do these measurements and then determine what a major event day is. There was one of those days in 2023, and it was July 12th.
Okay.
Yep.
Generally speaking, we'll see one, maybe two at the most. And then there's some years with next to zeros.
And there's specific criteria for that,
Yes.
has to, like a percentage of poles have to be out or something like that.
It's the severity.
Yeah, it's based on the number of customer outages and incidents, and there's a statistic like, how far from your run rate is it? If I go any further,
okay. It's okay.
somebody's gonna tell me I'm messing it up, but yes, there are standards.
It's the same standard every other utility is using when they compare. So we are truly comparing apples to apples.
Next slide, please, Aaron. So I highlighted vegetation management and cable replacement program. This is one of those examples. 2017 was actually the high mark for cable failures and the impact to our customers. So what that program looked like is identifying this upward trend. Okay, we have a problem. What was driving it? Cables. Digging in, understanding specifically what type of cable, where is it located, how many locations are there across the system, number of miles, and then populating a program to get that replaced. And you can see there was in 2017 an intentional increase in the spend, and over time this has been a good story to tell. We've been replacing 86 miles per year of this cable. It's an overall 10-year program for this specific type. I can show you a similar trend I think I did last year for vegetation management. But this is the kind of result we're looking at in a number of years. I hope to be able to come here and show you for the generation side as well.
Is the cable quality getting better? Is that helping?
Oh, yeah.
That's a good.
Yeah, this was a very specific type of cable. It was unjacked where the aluminum's on the outside. So to the best of our knowledge, because the cable we're using right now isn't a new design from what we were putting in 30 years ago necessarily, and that cable has held up. So yes.
So something that's important to highlight here is the amazing work that your team has on Troy and Clint. It's just fantastic here. There's a big element here on how we budget, how we prioritize the work. And I want to highlight that our teams have known about these issues for many years. But it's how we've been able to prioritize and make space in our budget so that we can address these that has changed significantly. What Clint brings to the table and an asset management program that now is well embedded into our capital prioritization process, where we have, and some of you may remember when the board approves the corporate operating plan, we talk about capital. You have a sustain capital and expand capital. That distinction was made a few years ago. It hasn't always been there. And ever since we made those distinctions, and it has allowed us to focus on maintaining existing assets, whereas in the past, you had, the latest thing that breaks, that's what we dedicate all of our dollars to. And then these type of issues become chronic. It took us many years to finally get to the point where we are today, but it was dedicated, very patiently going at it, replacing a very large amount of miles of cable every single year. But it's that discipline process that helps us in here.
And just to highlight, this particular type of cable is it'll take about 10 years to fully pull it all out. There were well over 1,000 miles of it. So we just been kind of chipping away at it.
Yep. But as a success story, 2023 had the lowest number of cable failures for underground cable on record. So take a quick victory lap on that, and it does show up in our.
That's the lowest number and probably the most miles probably measured underground cables we've ever had.
Yes,
It's bigger every year.
our total population of underground cable has only been expanding year over year. So yes,
which is over 5,000.
For you?
We have
Okay.
over 5,000 miles of underground cable.
Sorry, the failures, that's just an incident. That's not that's not.
What you're seeing up here is incidents. Yes.
That instance doesn't, duration or anything else isn't incorporated into this number. That's in the other numbers.
Yeah, so when a cable fails, that's not like a quick return. You got to dig it up and either splice it or whatever. So it takes a long time. So a lot of the SAIDI decrease that you saw, which is time duration, is being driven by this program.
I'm wondering, at some point, it would be interesting to see the return on investment, the proactive investment we're making to replace that versus the cost that it takes to fix the failures when they occur. something along those lines. I'd be curious if, is the juice worth the squeeze?
Right, and then if you extrapolate that to the economic activity that you stop when that just is exponentially higher return on that investment.
And it's the customer experience that's probably the biggest winner of this. Like, so when one of these fails, and if you remember, there was a subdivision near and dear to you that used to provide a lot of comments. Yes. So it's making sure that they have good power quality during heat and winter. Yes, I mean, we can definitely take a look at it.
And my question was also pointing in the direction of appreciation for the work, because decreasing number of incidents does reflect one part of it, but on expanding number of miles. And I mean, I'm guessing that other metrics that provide additional clarity related to this would document even more significantly the benefits that we're seeing from this program. So I don't mean to say that I think there's something that we're not seeing here. I think that more detailed data here would additionally support, this is really good, we should keep doing more of this. And so if any of that additional information, like normalizing based on number of miles or anything like that, could be included to continue to highlight how beneficial this program is, I think that would support even more of, let's keep this going, because look at all these great results we're getting from Sadie, Safety, all those kinds of great things. So
I think as we kind of have the elevate moment, it's really interesting, the timing of the JD Power.
Right.
That's to see this profile. And I think, between cost and customer service and reliability, perfect power, customer freedom, all these things are really converging nicely. It seems like great call.
Appreciate that. That actually hit the last note, which there is a tie here to perfect power and moving in that consistent improvement in the customer experience, but you hit it well. All right. Next slide, please, Aaron. The last one is the requirement for our transmission system. And that's to basically maintain compliance with all the NERC reliability related transmission standards. If you can go to the next slide. The story to tell here is we did maintain compliance with all the NERC transmission reliability standards over the last year. There were no enforceable violations. We didn't have an on-site audit. Those happen every 3 years. The next one is going to be in 2025. But in the interim, we are also subject to the requirement that would report any, should there be any. So the fact that there's no enforcement doesn't mean that it's just a matter of not being watched. In fact, one of the requirements is that we self-monitor. Remain in compliance there. And last slide, please, Aaron. Okay, so to summarize it, we have, as I opened up, 4 of the 5 metrics are in compliance. The distribution, where the customer experience is, that's really leading the way in terms of how we're in compliance and well in compliance. Acknowledge that there is some need to improve and some room to improve on the generation side, with those metrics being in 3rd quartile. I guess with that, we have some programs in place. We propose to the committee that we're taking reasonable and appropriate steps, but obviously that's up to the committee to decide. And I'll open it up for questions. This is my last slide.
So I'll hop in just real quick to say, as you all look at this, the systems committee discussed the recommendation that we are taking reasonable and appropriate measures to comply. So that's slightly different from what we've done with most of our other SDs, which is to say they've typically been sufficiently compliant. So this is like, I think we're reaching a level of sophistication in how we think about this stuff, where it's not just like, this is really bad. There's some nuance to it. And I think this is acknowledging that there's some nuance to it and underscoring exactly what you just described, right? Which is like lots of success and wins in many of these areas, but we've got some opportunities when it comes to the generation side that, as you've already articulated, we've got measures in place where we're starting to take action to start to address some of that stuff. So committee members, feel free to hop in there if I've missed anything important with respect to that recommendation.
May I ask, you mentioned an EPRI program that you're using in regard to generation. Could you speak a little bit more about that, please?
Yeah, so EPRI, and actually EPRI consulted with some outside reliability centered maintenance professionals to develop this program. It's got 6 major areas. It starts with identifying the criticality of components. And based on the criticality, you go through and identify the failure modes behind them. You implement the programmatic actions, PMs, whatever it takes for, all of these. And then you have system health monitoring, long-term asset management, where you monitor the results and use that as feedback to the program. So EPRI kind of leads the way in the utility industry and kind of how to implement this. I would say we've always done elements of it for all of our major equipment. You look at the major failure modes, but to me, the way I look at this is making sure the net is complete, right? So I work top down, asset management. What does it take for investments in my major assets? Well, that's great. Well, what keeps the little solenoid valve that's tied to a piece of equipment out in the plant from being the thing that trips the unit offline?
EPRI's R&D department really helps drive the industry, and we see changes in the way things are made, components are made, things of that nature, all driven through this organization. So they're a fantastic resource for us. Javier's been very supportive of our engagement within that organization. And we're seeing it here. Brad's group on the systems transformation standpoint uses them for many things. They're just a fantastic resource for us. And, they work a lot with the federal government too, as kind of this agnostic entity who kind of talks about, the physics behind everything.
And I didn't say the words, but EPRI is the Electric Power Research Institute. So
Just let's quickly, very important to, yes, absolutely, yes to everything that's been said, and to acknowledge that we're not the only industry that works with big machines that have to be on all the time. And I think I commend Clint and his team, because we're not only just going to EPRI, which is a very important partner, just looking at also at standards that have developed across the globe, across industries. Think about big manufacturing, water systems, sewer systems. It's asset management practices that help us stay on top of things. Of course, they have to be tailored to our specific equipment, but those practices in asset management standards across sectors and across regions in the world. And that is something that we've been focusing a lot on our asset management piece. It's what can we learn from other industries that can help us improve our asset management practice.
Okay, colleagues, any additional questions, thoughts?
I just want to express my appreciation of you sharing the equivalent availability factor, that previous metric, and the new metric. With that new metric having reporting years back into time, I'm not sure that when we've changed the metrics in the past, we've looked in the rearview mirror very much. And I appreciate that side-by-side comparison as we're adopting that new metric. Thank you.
Okay, anybody else? All right, so this will be on the board action item agenda for Thursday to approve. Okay.
Thank you.
Thank you, good job, well done. Colleagues, any reflections on what's been accomplished, challenges, and or strategic implications?
I guess just one thought. We looked at two different types of metrics. One was the early two metrics where we were third quartile and both numbers and trends were challenging. And the other was on city safety, customer felt impacts of the availability. And the first two, I guess the separation between the first two, how are we not quite where we expected or want to be on the first two, but doing so well on the second two? And what is allowing that to happen? I just feel like there's something to be more fully understood of how are we anticipating that the steps we're taking with new resources will show strong change in the first two metrics over the coming years? I guess I'm just interested in, it just feels strange to have third quartile on the generation resources, but then we're doing so well on the actual way that impacts customers. I guess kudos to everything that happens between the two to get to that positive outcome, which is what customers most actually care about. But it does still feel strange that the generation resources that are measured in the first two metrics are third quartile and not within what we would hope for. I guess that just seems like a point of interest to me of these seem divergent.
Thank you, Rob. I'm going to tie this to the strategy piece, and Troy, I'm happy to get your thoughts on this, but we're responding to very different environments. I think this shows you that we've been operating under the Southwest Power Pool the ahead real-time market now for going on to 10 years. 10 years, actually, 2014 was. We are running our generation fleet in a very different way than it was originally designed. And so we're catching up and we're starting to see a lot of additional maintenance and investment that we need to do on our generation side, that the rules have changed significantly, or the environment that which we were generating has changed significantly. On the other hand, distribution and transmission really hasn't changed, other than, of course, the climate is hitting us every single year. We haven't seen that same paradigm shift in transmission and distribution, although that's coming. You know, with the advent of a lot more load, you have electric vehicles, you have electric heating. We will start putting a lot more strain on our distribution system, and at some point, if we don't keep an eye on this, we will start seeing a degradation on our distribution system. But I would say probably that's one of the biggest differences on why we're seeing this shift between generation and transmission and distribution on duration and frequency is explained, I think, by how the market is working. Troy, I don't know.
No, I agree. Again, some of it's age and some of it's the conditions in which the generators are now operating. So quite different than it used to be. And for the coal units specifically, it's different than what their design standards were. And so we've adjusted those to make more flexibility for the variable component that we now see in the grid market, you know, from renewables and so forth, to help balance everything out. And so that additional flexibility definitely drive some of those differentials that we see. But if you were to go back 5 years, you would have looked at the safety and said, oh, this isn't going the way we want it to. So we were very, very focused on that. I will tell you, just now that I have both sides of the business, it is easier to trend the T&D side of the business than it is the generator, because you have several 100,000 of different components on each generator, and any one of those that fail can cause you problems. The simplicity and of the T&D system is a little less in that space. It's easier to trend. So that's just something that I don't know that I picked up until I got in there, but I think Javier's totally right. It really has to do with you're asking assets to do something differently than maybe you would at this point.
And I think part of my point there is, I mean, I don't mean to, this isn't a criticism on either side of this. I guess it's just a point of interest. But the follow on there is, as we anticipate additional changes, since we're doing so well on the distribution side, a lot of the next changes are going to be on the distribution side. And so, you know, I guess changes in the market that have impacts that mean we're outside of our anticipated goals for the generation side. What does that imply for what we're seeing with good metrics that our customers appreciate on the distribution end of things moving forward? And so, you know, from a strategic or forward-looking perspective, how do we avoid the risk that these numbers also become negatively impacted by changes in the market or things that are outside of our control? And I don't know what that means at all. I just feel like there is something that we should keep an eye on strategically, and whether or not we need additional updates to the metrics or something in the future. I don't believe that that's necessary now, but it does seem worthy of, we anticipate additional significant changes that are outside of our control that would have an impact on the things that are currently grooving.
Yeah, some of that's in the SD9, right? I mean, the way Brad and his team starts looking at what does electrification look like?
Yeah.
What does it look like as EVs come into systems? Those type of things are making their way into our forward planning that should help us land more softly as those changes start to happen. And I think you'll see the value of bringing all the planning functions into one group now to get their hands around those things will be meaningful for OPPD for many years to come. But I think that gets to where you're headed of thinking about the future and trying to plan according to get ahead of that. But then I will just preface, there are times as you go through years that, you know, some years are tough and you have to tighten the belt, other years are not. And, you know, you're just naturally going to see some years where you have some swings in performance because of that. We're in a really good space right now. As an organization, we've focused on financials and strengthening our financials, and it's allowed us to do a lot of things now that we weren't doing maybe 10 years ago.
I would just offer briefly, I think the system the board has set up from the SD9 perspective, the integrated system where we actually talk about each layer of the system, transmission, distribution, and generation, and the very complementary nature between the SDs for what Troy has done when he's expanded the metrics that look at all the layers of the system, even when it's uncomfortable when you're third quartile. And I think that's been really good. Javier talked about budgeting and how we plan and think about things. This kind of reporting, albeit uncomfortable, gets the organization's resources in the right locations to get the best outcomes as safely and quickly as possible. And I think that's been really good. And I guess my final comment would be, we talked about the integrated distribution plan. That has a lot of facets to it, but I think one thing I would offer the group is, I think the best leaders plan the plan and then work the plan. And that plan, the plan piece is kind of that IDP to advance the functionality that's out here for our customers in pursuit of perfect power and customer freedom primarily, also sustain a cleaner world. And then as we work that plan, we may identify metrics with some of those system components that we start measuring on to gauge performance.
Sorry.
I apologize. I was just going to add a note, echoing Brad and Troy's comments. Not one of being definitive, but we feel the weight, I guess, for lack of a better term, as we field customer inquiries and we know customer preferences are changing. That will seem to do nothing but add complexity on that side of the business, which I think your question inferred to and both have alluded to. And it's not just the complexity of the equipment, of the devices, the generation and storage, but maybe more profoundly, it's the generation of motivation of how those are used, right? So we're managing our assets from a standpoint of reliability and cost and sustainability, and others, be it individual customers, maybe managing their devices for their own comfort or for their economic input, or aggregators may manage load for just a different reason, right? So I think that's an additional element, probably one that was inferred in the dialogue, that we feel really profoundly as we signal and bring unique customer requests to the table.
I've got just one more add. I haven't talked about it a whole lot in this space, but the last couple of years and then definitely the next few years ahead of us, we've been on this view specifically for the generation fleet on kind of weather and climate hardening. And so we've done a lot of work in that space, and that's a proactive thing. As we see things changing, we're trying to get ahead of it. Those extreme temperatures that we're now starting to feel also impact, mechanical equipment or even lines and things of that nature. So you're seeing a lot of activities there. There's stuff going on the T&D side, maybe I haven't talked about as much, that we're trying to get out there to reduce galloping and all those kind of things. So there's a ton of stuff that maybe hasn't been peeled back here, and we'll have to think about maybe how to make that a little more transparent in systems and in this space too.
I just have one comment. When you look at transmission liability and the continuous monitoring, how does the aerial monitoring, has that had an impact on these, great performance measures it seems like that aerial monitoring has to have a real positive effect on how you're able to make our transmission system better.
Absolutely. So LiDAR, we use LiDAR a lot now. We have helicopters, we have drones. The inspection process that we have is much more robust than it used to be. We are ramping up significantly some of our structure replacements because of those. And we've replaced conductor. We've gone through lines that with the LiDAR, we can see there's some tightening that needed to take place. So there's a lot of activity going on because of that knowledge. And then the systems are becoming so much better that we can actually log all this. We know when we did what. It allows us to start thinking about, okay, when do I need to come back in the future?
So I guess that's kind of in response. We are taking we are leveraging some technology to help make sure that this transmission excellence continues into the future. And I think the aerial monitoring to me is amazing to be able to take advantage of that.
Greg, you asked about this. I guess my summary version would be, I'm very interested in our proactive work on innovation and market transformation, to borrow a term that we used in the past. I continue to be very interested in that moving forward and look forward to additional discussions on that.
Sounds good. That's helpful. I've got two things. One is I want to point out with the equivalent forced outage rate, talked about the fact that we're third quartile. It's important that we remember that our goal there is middle of the second quartile. So like, let's keep that delta in mind. It's not first versus third. Second quartile goal was set after we went through the process to update the SD based on a good baseline of data, right? It wasn't like your finger stick in here, it was data driven. And the second thing that I'll offer, just from a perspective standpoint, Brett, I appreciate the create to plan, work to plan. As somebody who does planning for a living, I appreciate that. But I think what I've learned over the years is, and modify the plan as you get smarter. And that's a lot of what I feel like I'm seeing on the generation side, right? Is like, yes, they're older, but we're also running them really differently. And we're learning a lot about what's working and what's not as we do that, which is going to inform how we do that going forward. So I appreciate this conversation. I think it for me, I hope that what the board is doing is sort of reinforcing the importance of this work and how we take it very seriously. Clearly, our customers take it very seriously as well, as was evidenced by our SD5 monitor report. And there's a lot of good success, a lot of work in front of us. So, okay. Any last comments before we button this up? Great, thank you. We're going to keep moving on the agenda. On to the Bennington expansion transmission construction.
We have Shane Hansen, our Director of Transmission and Distribution side of the organization, to present that.
Perfect. Thank you, Troy. All right, yes, and Aaron, you can go to the next slide, please. So ultimately today here, we're looking to award our RFP for contract to procure the construction services to rebuild an approximately 3-mile, 161 kV transmission line. This is in support of a new substation near the Bennington, Nebraska area. This substation is needed as a new distribution load serving substation due to the load growth in the northern Douglas County area. So we started planning this. Brad's team did a phenomenal job planning for this several years ago. And having those plans in place allowed us to really start executing on this work once we saw this load growth increase through the past few years. For this work, we did receive 9 proposals from different contractors, 8 of which were legally and technically responsive. And ultimately, the proposal from Altitude Energy was determined to be the lowest and best bid. So here today, based on that legal and technical review, we are recommending award to Altitude Energy. And just, a quick fact of the engineer's estimate for this work was $3.3 million, and the award value is just over $2.8 million. Fortunately, no pictures today, but any questions on this?
Surprised at the June to September does not seem like a very long time frame for transmission construction. Is this a relatively small project?
It is, yeah. So 3 miles, and it's a rebuild, so the right of way is established. So it is, yes, comparatively speaking, it is much simpler than a traditional large rebuild or new line.
Any question? Have we worked with them before?
We are actually, this will be the second time we've worked with them. They're actually currently building an additional greenfield substation for us in the northern Douglas County area right now, but have a phenomenal background reference sheet and are doing great work in the substation space for us now.
Right. Yeah, so it looks like they're out of state, so just making sure that we are familiar with them enough that.
Yes,
Thank
sir.
you.
Yep.
Okay, colleagues, any additional questions? That's good, thank you. And finally, we've got an engineer certification for Omaha.
Mr. Edom, back up.
Yeah. Lots of back and forth. Okay, so today I'll talk about North Omaha Station Unit 5 replacement low pressure turbine blades. So Unit 5 is in a planned outage right now to conduct maintenance, including inspections on the steam turbine. These inspections are completed approximately every 7 to 10 years. Quick context, turbines have multiple rows of blades that work together to allow the machine to operate efficiently and at full rated power output capacity. So during this spring's inspections, we did find cracks on the low pressure turbine L- row blades, which is just the designation for that row blades, which creates challenges for safe and reliable continued operation. Aaron, can you go to the picture, please? This is probably worth 1,000 words. So that's the actual Unit 5 turbine, the low pressure, and they do have mirrors, so it's opposing, and those are the L- 0 blades. So there's 176 blades, and they're 30 inches long, so they are the largest blades on the low pressure turbine. And we did find cracks on those. These blades have been in service for 39 years, and no cracks were present during the last inspection, which was 2019. So we collaborated, and a multidisciplinary team evaluated several options to address the damaged blades. We determined that a full blade replacement for the affected rows was the best option to balance unit safe and reliable operation as well as overall cost. The teams are working to expedite eventual procurement of the blades to reduce the schedule impact and assist in mitigating a potential reliability risk if other generating unit challenges occur. As stated, an engineer certification has been prepared in support of this project, and we would recommend approval of that engineer certification and authorize management to negotiate and enter into contracts for Unit 5's low pressure turbine replacement blade materials and installation services. Questions?
Can you comment about how this work relates to the long-term strategy at North Omaha Station?
Yes. So regardless of the fuel type, whether it be coal or natural gas to produce the steam, this unit, the turbine is an integral part to attain the accredited capacity of where it's rated. We have to replace these blades. So this supports both the current operation and post-fuel conversion for reliability of the unit.
So this will not put any pressure against the planned refueling from coal to gas.
Nope, supports fully.
I think it supports it, right? If having both healthy units 4 and 5 then allows us to continue with the plan as scheduled, which is the retirement of units 1, 2, and 3, and then converting units 4 and 5 to natural gas. You can only do that if you have a functioning turbine, so all aligned with NC7.
I appreciate the explicit indulgence on that particular question that I ask frequently. Thank you. Yeah.
Other questions, colleagues?
Okay, thank you.
Thank you, Scott. That is it for the System Management Nuclear Oversight Committee.
Great, thanks very much. We do have other business items for today. First is confirmation of the board meeting agenda for Thursday. We've got that on screen. Everything is planned for the consent agenda. Does anyone have any requests for things that are listed on the consent agenda to be moved to the discussion agenda? Had good discussion on all of these things. Getting in good shape. Okay, hearing none, we'll anticipate all of that unless there are other comments. And then board work plan is next. Difficult to see on screen, we can see it on our own screens. Do any of the committee chairs have any updates to what's reflected here or other updates based on work that's been accomplished?
We'll just take a lap on getting 3 things off the list, which is great.
All right. Well done. Any other changes, anything like that? All in good shape? And from this, we did flag the potential date for the board workshop in the fall. So just a reminder to everybody, we'll finalize details on that, but this is strongly related to that. So keep all these in mind as we point toward August 29th. Okay, glad I heard that correctly. Okay, sounds good. We'll get those updates implemented then. And then we do have a reporting only item for new generation and transmission updates. I got 2 names on the list here. Who's going to start? Brett Underwood.
Thank you, Chair Williams. So you always got to be careful when you use absolutes, but I'm going to say that we're doing all the things. 5 or 6 subject matters here with various experts who are going to come up and share the progress on our new generation and transmission for our customer owners. And so we'll go ahead and get started with the first speaker.
And I think you'll see a new face today. So Cheryl McGuire will be presenting the first piece of this. Cheryl was recently promoted. She's our new Senior Director of Operations Support. So she has all of the project management, work management, some training functions, as well as kind of clerk and some admin functions within the organization. So how long have you been in the role now?
Since March 3rd, so very new.
So not very long.
Right.
So you want to talk a little bit about your background real quick?
Oh, sure. So been with OPPD for 27 years. Basically started off in IT while I was getting my engineering degree. I have a degree in civil engineering. And so then I moved down to distribution engineering because there was an opening, and you can meet a ton of the company through distributions. You know, I got to meet a lot of people in generation, substation, transmission. Worked my way up from supervisor to manager of the department. And then in 2020, I was part of the 5-person team that was looking at the strategic initiative for the electric system evaluation and modernization, or grid mod. So worked through that and into execution. So then I stopped being manager of distribution engineering and started working on that full time. So worked with that for like a year, and then this position became available. And so I was lucky to be appointed here. So glad to be in this new position and joining the team.
Welcome, Cheryl.
Thank you. So today the agenda will be giving updates on Standing Bear and Turtle Creek Station, updates on solar projects, energy storage, new generation update and next steps, and then the North Omaha Station refuel and retire. So you can go to the next slide. I'll be doing the Standing Bear Lake Station and the Turtle Creek Station updates. So next slide. So at Turtle Creek Station, the overall site progress is now at 84.2%. Some of the activities on site on the generation side is assembly of equipment, installing wiring, and installing piping. OPPD staff has just been recently trained on the facility response plan in case of an oil spill per regulatory requirements. And then we've commenced on component and system commissioning. And at this site, our focus now is preparing to energize the first generator step-up transformer. So some of the pictures that we have on the slide on the bottom left is facing south of the site, looking at the power block progress. So power block number 1, which is on the left side, has reached its max height. And I do have a picture later on that shows that, but in this picture, they were still at the same height. The middle picture is of the control panel and the fuel building and the cable terminations there. The bottom far right is the laboratory that OPPD will use for water treatment. And then the uppermost picture is the distributed control system cabinet, where all the control wires come into for the complete site. You can go to the next slide. At Standing Bear Lake, the overall site progress is now at 92.4%. Some of the activities here include Wartzilla completing the last assembly phase on the engines in the engine hall. This site is also working on assembly of other equipment with emphasis on wiring, and MUD is completing the installation of piping for fuel gas. At this site, we're preparing for component and system commissioning, so the focus is all the electrical work that would need to support commissioning. Some of the pictures on the slide, the bottom left is a picture of the Wartzilla cabinets in the control room that controls all the engines.
And if you're counting, those are 9. 9 turbines that we just referred to earlier.
Thank you. The middle picture is the distributed control system at this site. And then the bottom right is a picture of the 13.8 kV cables, which are terminated from the generator step-up transformer to the power distribution center. And then the topmost picture is sample ports on the exhaust run that we'll use for emissions testing. Next slide. And then the last slide is just showing both of the sites facing southeast, Standing Bear on the left and Turtle Creek, of course, on the right. And then if you look at the Turtle Creek picture, you can see there now the power block number 1 on the left-hand side has reached the maximum height, and they're working on number 2 to get to the same height. So with that, if there aren't any questions, I'll move over to Kara Wozak for the solar update.
Could we have an update on projected completion dates when we haven't run
So the completion date is still on target for Q3, so.
for each unit,
for-
for both locations?
Yes.
There could be some risk in that. So like, as we work through this and there are challenges on the sites, I would assume it'll probably slide into the first part of Q4. But relatively not a huge move at this point.
Just a quick question. So we've authorized additional turbines at these sites. Is there work that's going on at the same time while we're finishing this? Are we starting at these same sites to work on things for the next?
You'll get a little bit of update. Let me start off by saying the site on the left, there will not be any additional added to it.
Oh, that's true.
The facility on the side, on the right, Turtle Creek, will have some, there's space there. Most of the grading was already kind of completed, so like it's a really good space for that. And then at our other facility, Cass County, that was originally set up for additional. So we still have to work through the process of hiring someone to actually construct those.
But the substation there is big enough to accommodate new turbines? Or do we have to add to the substation as well?
The footprint is large enough. We'll need more equipment.
Okay.
Yes.
Thank you.
So we had planned this site for size for an additional turbine if we felt like we ever had to get there, obviously. Load keeps growing very quickly, and so we've had to make that shift. But
Great, thank you. Nice to meet you all.
Thank you.
Not sure.
All right, good afternoon. My name is Carol Wazak. I'm the manager of renewable energy resources. I'm going to give you a solar update as well as an energy storage update. So for the solar, first one, Platteview Solar. So we are currently construction, all major equipment has been installed. The majority of construction activities are complete. We are test energy is ongoing, and we are currently doing capacity and availability testing. We're working through some of the final activities that we need to do, including the educational kiosk piece, looking at a planned road cutting event, and working through final activities for commercial operation. Next slide shows that just the aerial overview of two of the parcels. So this is about 500 acres, 81 megawatts. So we have 3 parcels. This just says your north and south parcel. There is a center parcel as well. Next slide is a K Junction update. So on K Junction, we have the executed generation interconnection agreement that was executed in August of 2023. The project team is continuing to work through the schedule and working on the planning and zoning regulations, continuing with our community engagement. Currently, the planning and zoning regulations, we are expecting a public hearing on those in May as we continue to work for reasonable regulations for this project. And then we continue to work with NPPD on the timeline of the transmission upgrades as well as the facility upgrades needed to connect this facility. I guess any questions on the solar projects?
Carol, if I could real quick, I mean, that solar facility in Saunders County is one of the larger solar facilities in SPP. And with being first to do those kinds of asset deployments, there's been a lot of challenges with that. So I just want to recognize you and the team working with Lisa and her organization to be very present in that community. And as those matters arose, to try and be as available as possible, sometimes being a broker, sometimes fixing the issue ourselves. I know that's been really taxing and laborious for a lot of folks, but we know at Public Power it's worth it. And so being able to kind of see the commencement of the asset a number of years ago, and close to a half decade now, I guess if this was a 2020 thing and next year's 2025, to see it come online and serve our community, just an incredible thing.
And may I add from Javier and our colleagues, thank you, Director Omaha, because you have been actively involved in Saunders County. So thank you.
The K Junction facility in York, I would just offer a supplement that we had an unexpected passing of a commissioner. And so the York County Supervisors is dealing with that. And so there'll be a replacement commissioner. It's always unfortunate, of course, when someone passes. And so we look forward to supporting that community as they go through that process and staying engaged with them as they work through those things to try and achieve clarity on this, but really unfortunate news. And just wanted to make that clear for folks so they had the best information. So Lisa, I don't need you to add anything or.
Yes, the engagement, it's been a lot of education. We have team members that are really out in York County almost every day, talking to the community, and greatly appreciate the tenacity of our teams and the coordination. So appreciate it. More to come. They plan on putting applications out for the new commissioner through the end of April, and they don't want to make any decisions on anything until a new commissioner is appointed and the right timing. So we will keep you posted.
Going back to the topic we mentioned earlier on psychological safety and multiple perspectives, I think this is a great example of that. Right? We have a perspective to generate energy and power and keep power flowing, and also the perspective from the landowner side of things. And so that has been a great opportunity for us to collaborate as public entities in bringing those perspectives. I'll mention one last thing on this. You mentioned ribbon cutting. And one of the themes for 2024 for OPPD is going to be ribbon cutting. So I just want to, just a heads up, we will have some dates for you to put on your calendar at some point. Save the date for us to go and celebrate the completion and energization of Flatview Solar, Turtle Creek Station, Standing Bear Lake Station. So lots of reasons to celebrate. Not quite there yet, but we're almost there.
All right, next slide. You can move on. Energy storage update. We just wanted to come and give an update. You know, our near-term generation resource plan showed approximately 125 megawatts of energy storage at 4 hours equivalent. So going through that, looking at the benefits. So benefits of energy storage, it's a high resource adequacy for summer and winter periods. Energy market arbitrage. It can provide transmission congestion relief, help out with frequency regulation and voltage support. So you'll see in the picture there, that is the OPPD Bright battery that came online in 2023. We have, been operating that, learning a lot from this. It's kind of helped us with some of our decisions and going forward. So it's been a great resource to learn from, and we're continuing to learn as we go. So with that, our next steps with the energy storage is we kicked off with a strategic partner to begin a scoping and siting study and work on the feasibility study so we can plan our next steps forward with the energy storage.
As you'll remember, Troy Vai established a new division within his organization, the large project, major project division, Troy? I have that right. Major projects. As we engage with a vendor, we refer to as strategic partner, Burns and McDonald, who is helping us with all of this work. It is really important because we really haven't talked that much in public about our energy storage projects. But there's a lot of work behind the scenes in studying, siting. You have to study the whole thing from how the battery is going to charge to how it's going to discharge, when, and all the transmission connections that go in there. The board approved 125 megawatts, and we're heavily studying location. North Omaha was one of the locations that we identified as a potential one. There's a lot going behind the scenes, but not ready for us to announce anything just yet. But we wanted to give an update to the board and emphasize how important the energy storage is for our strategy. Well coordinated with the utility, making sure that it is helping us solve the resource adequacy challenge we have in front of us in a way that it's reliable, and it also aligns with our pathways to decarbonization and net zero carbon goals. So all of those things are great, and we're working to make that a reality.
If I could add a small supplement, is if you've been by North Omaha recently, and I have, you see the kind of temporary tent erection and you see equipment there at the site. And so as the teams go through the execution of refuel and retire, and that site clarifies what it's gonna, it becomes more clear what the site will look like once the work is finished. That's a significant enabler to this kind of decision to get those battery asset attributes in the right locations. And so being able to work through that, I think, in an orderly fashion is going to be very, very important for our system. And I appreciate the focus that UO has to try and execute that many things in that small of a footprint this fast. I think that's been very difficult, but we've been working really closely together to make sure that this is sequenced and the chronology is as quick and as safe as we can get.
All right. I'm gonna turn over to Jake Glenn. Thank you.
Thanks. Thanks, Joe. Jake joined our team a couple months ago.
End of December, beginning of January.
End of December. Okay, very good. So Jake's our
Nothing's
manager.
counting.
Yeah,
Blair.
manager of thermal resources. So Jake, thanks for giving us an update.
Yes, thanks for the introduction. I won't introduce myself any further, but just wanted to give the next quick update on new generation and next steps. So appreciate everybody's help, especially sitting over here on the right that participated in the Nebraska Power Review Board. It was successfully approved that day on March 15th. And a lot of work went in behind the scenes with a lot of teams that supported all our vice presidents and others that showed up to the board hearing for that, as well as you guys that helped kick this project off. So our next steps, we're working through requests for qualifications for potential EPC vendors. Those have gone out and they've responded back to us and are in an evaluation period by our team currently. Next steps will be we're continuing to scope these activities and these projects. Making sure that we catch everything we need to include into the information that we would provide in a request for a proposal to a potential EPC vendor. And then in parallel path with that, we're continuing efforts with the geotechnical contracts to get those executed for the project and to include them with the bid information for an EPC vendor. Next slide, please. So you can kind of see a short timeline for the near future of what we're working on. We're continuing to work on that information that goes into the RFP bid documentation that we plan to put out around July 24. Continue to negotiate and bring under contract the EPC vendor and then award that EPC vendor in fourth quarter of 24. So those are the near-term next steps for the new generation projects.
Before you move forward on the awarding the EPC, we have the authority to do that, of course, and talk about this, but I just want to reemphasize it. We will bring the board along in all of these discussions, whether it's in closed session or eventually in public session, to announce how the selection was made and who the EPC vendor or vendors may be. So all of these will follow the same pattern that we have for public communications.
Thank you. Any further questions? Thank you.
Thank you.
Yeah, one more update.
You should have sat on that side of
Yeah, I probably should have. Good steps. Okay, so I'd like to highlight some of the great work that's being done at North Omaha Station. Many teams have done a substantial amount of effort supporting the continued safe and reliable operations, as well as progress the natural gas fuel conversion related projects. So we'll talk about several of those now. On the top row is my best attempt at a before and after picture. So it looks like a bunch of equipment, and it's supposed to on the left, but on the right, you can see that a substantial amount, including that air receiver that's on the ground that was vertical on the left, has been moved. So we are making preps to install some pretty large fans that will allow operation of the new burners on natural gas. And so we've had to move a lot of equipment in the basement at Unit 5. I want to highlight that we did that while Unit 4 was operating, and we safely did it with temporary systems. So again, a great highlight there. In the lower right-hand corner, that's the picture of the air preheater. You previously approved the actions to replace those baskets. So that's to allow efficient heat transfer of the incoming air. Those have been completed safely. There were 384 baskets replaced. And these are required for both operation on coal and natural gas. And in the bottom left is a kind of a time lapse for pictures of the aux boiler, which again, we'll need to use the aux boiler when the units 4 and 5 aren't operating during the winter, because right now we use some steam from their operation to heat the building. It's a 14,000 pound component that we use to lift in. So that's the lower left. The middle picture is where we cut a hole in the turbine deck floor and then put it on its footings. And the right-hand side is as it sits today with the safety grading around it. So this has been a great collaboration from both the EPC contractor and OPPD personnel. So some of the OPPD maintenance craft have assisted in routing piping for this to get it completed. So that's what I have. Pending questions. Again, a lot of great work done during the outage with no impact to Unit 4's operation, which is good. And there are a lot of interrelated systems.
What's the fuel source for the auxiliary boiler?
It'll be electric. So we'll use the electricity there to make steam, and then that will, so instead of, we did take a nod as part of when we planned this, as part of the decarbonization initiative, to go with an electric aux boiler vice natural gas or fuel oil.
Is there some form of emergency backup system in the event that some kind of circular redundant failure occurs?
Of course, we do. We will install a flange that we can bring in an emergency boiler and connect to it, or we can start up one of the other units that are there and dormant, because we will have a natural gas supply for heating steam. So there's actual two layers of redundancy there. We'd likely do the startup of the boiler first, but we have a tertiary backup as well planned. I got plans.
What's that plan?
And some plans.
Other questions? Okay, so last time I'm talking today.
Okay.
Thanks.
Oh, Megan, in here.
All right, so that reaches the end of our normal agenda. Today we have an update, and there's a new item at the conclusion, opportunity for public comment on items of district business. So before we adjourn, we will take comments from the public on items of district business. Comments made by all parties during the meeting are part of the official public record. We will take comments in the room first and then via WebEx. For in-person attendees, if you wish to make a comment, I will call on you to the podium, call you to the podium one at a time. Please state your name, address, and the name of any organization or person you represent. Each individual will be allotted 3 minutes per matter pending. To assist you, we will use the timer on screen. Ms. Lane will signal you when 30 seconds remain, as well as when time is up. If you have written materials, please deliver them to Ms. Lane. For WebEx attendees, if you wish to make a comment, please send the meeting host a message and use the chat feature or raise your hand. Detailed instructions can be found on the OPPD website at the link shown on the screen. When I call on a member of the public to speak, please affirm that we can hear you before commencing your comments. Please state your name, address, the name of any organization or person you represent. Each individual will be allotted 3 minutes per matter pending. To assist you, we will use the timer on screen that signal when 30 seconds remain, as well as when time is up. If you have any written materials, please email them to corporatesecretary@oppd.com. They will be received on our behalf. For all attendees, please direct your comments to me. I will either respond to you directly or defer response to another board member or officer of the district. The board values and welcomes civil, respectful, clear, and concise communication from the public. During public comments, speakers should refrain from repetitious, profane, or irrelevant comments. Speakers shall refrain from polling the board, as such vote is not on the agenda and is prohibited by law. Ms. Lane, do we have any members of the public who would like to comment on items of district business who are located in the room? Okay. And do we have any members of the public joining us virtually via WebEx who would like to comment on other items of district business?
David Corbin?
David, this is a slightly different setup, but should be the same for you. So let us know that you're there.
Yes, can you hear me?
We can, please go ahead.
Okay, I didn't know, is this just started this time on committee meetings for public comment?
Yes, that's right. There was a legislative bill with an emergency clause, so we're beginning effective immediately.
Oh, well, good. I appreciate that. The main thing I want to do is to talk about LB 399 and LB 1370 and the disappointment that OPPD took a neutral stance on both of those. There are many organizations, more than I've ever seen before, especially working 399, and all of us were disappointed at OPPD's stance. Fortunately, we were able to get that bill to be very much more reasonable than it was originally done. And the same goes to a lesser extent to 1370. But there's been no explanation other than the fact that you took a neutral stance. And publicly, it would have been nice for all of us who were working on those bills to know why you did it and to find out why the board wasn't more involved in those decisions. So thank you.
Thank you. Appreciate your feedback, and I'll assure you that board members were actively involved in communications with staff on the topic. Are there any other members of the public attending virtually who would like to offer comment today? Okay, thank you very much. That concludes the inaugural public comment on our Tuesday committee meetings. And with that, we are adjourned at 1:53. Thank you, everyone.